Oh yeah, thank you. So yeah, basically today, so far we've had the move at the open. Basically I did this so far. We've taken it from the very, very low to the POC basically. That was a good trade in the morning. I took it on MNQ and NQ, and that worked out really well. We can go over quickly what happened yesterday. It was absolutely amazing day. One of the best days in a while because it had such great movement. Um, yeah, anybody that's still in from that day where I was like, it's gonna have a meltdown. It doesn't come back for anybody that shorted that day. Funny enough. Also, um, let's go over exactly what I talked about yesterday because I don't want it to get forgotten because it was such an amazing day. Um, basically, wow, what a retracement back to the blue channel. We had a blue channel in there and it was using it. Um, notice the negative response to the downtrend also. So the red yellow line in there, it had a negative response. Also, if you're hedged above old all-time highs, you're benefiting off of this and may consider trimming some off. Notice how we just went past the 261. I expected to test it from below, so on and so forth. Um, yeah, that'll be interesting. You know, yeah. Basically, yesterday I just wanted to go over this real quick. We were looking at it returning back to that blue bar, return to the support of the blue bar, just like a blue line. I think he can offer a short-term trade. They can profit enough off the return to the blue bar and let the rest continue to the high of the blue bar. It may take a few tests to get through the high of the blue bar, but it remains the short-term target for this multi-low zone. And I went in there and explained the high of the blue bar is the threshold that, if broken, can threaten a larger retracement. If you're long below all-time highs and holding and hedged, there's no better way to be positioned. If you have a side account, capturing the reversal is my short-term interest. Keeping the stops at the extreme is key to having as much flexibility to get to the targets. It's working out really well at the moment. Managed to take up this decently. Still have MNQ running also, and you can see I bought, sold all the way up and profited off of that. And then with 1 minute to remain on the report, see that stepping on top of the blue bar after broken is normal, allowing it to happen is okay. You can see it it did that. It came above it and then stepped right on top of the blue bar just as we wanted it to, and continued going from that point on for the rest of the day. And of course that's how it went to that blue bar. So this is the report coming out right now. Ultimately, it could increase volatility. So far, we've created a trend that ultimately is likely to break. No immediate movement so far. Looks like we've broken the trend immediately, and we're off to the races. This entire upwards move could be taken out, so we have to be aware of dragging stops into it. Um, of course, if you kept your stop at the extreme, like I said before, you didn't have to do anything on the report because you're still profitable. And you can see most of that move being eaten back up, just like I said. And then I'm just going to go over what happened after we hit that target yesterday too, because when we hit that target at the high of the blue zone, you can see we're watching to get above my blue line, and it can mean a trip to the yellow above when broken. It's beautiful how that whole thing was taken right back, exactly as it should be. And then, of course, the next picture on that next post was, exactly a reversal, exactly how it should, and it moved exactly to where I wanted it to go. And and then we did this, where I was like, all right, worked out really well. Another banger from the low, and I had a circle literally here and here because you could see I had two circles. And I was like, all right, this circle matches this circle. Not quite that one because I dimmed it out, so I put this one in there. You can see that I was like, these are the patterns of the moment. We were looking at that, and this is how I was interested in it getting there. I was like, okay, this means that, so we're trying to get into there, and effectively came right up into it. Absolutely amazing. That's where I explained how the 61% of the triangle was actually part of that move. Of course, anybody that just simply kept their stop at the extreme throughout this entire environment is absolutely safe while everyone is jumping through hoops to try and get their positions back or trying to get exposure, while they could just be safely sailing through this environment if they understood the way to do it. Yeah, pretty heavy size candles there. And I think that the entire movement that we've had to the downside will be bought back up ultimately. Maybe not on this particular move, but I am looking for it to ultimately get bought back up. It's a ploy on trying to get people to sell their long trades and trying to get people to short it so that they can stop them out. And we will see that if you position yourself the way that I've mentioned, then you are set up for the most profit so far in the day. But I'll be right back. We can see it's done another one of those anticlimactic 50% retracements. I can see that it is exactly the same as the movement that we did right here. Um, Reminds me a lot of that kind of pullback. Yep, an indecision pattern where essentially we want to be careful with any entries made within this node. Effectively, the majority of the volume's been contained within this little area right here, and it's like we've basically had wicks and spikes out of the highs and the lows. Go ahead and just put a range on there. Um, well, the thing is that I don't think it. I, I don't think that it's really even. I think that from this point right here, that's where like the volume it like peaks out and like everything on that high. If you notice, like everything comes back as quickly as it left it, and that makes me think that it's wicks and spikes up there. Like it's all bullshit. Like everything that it ever does up there is complete bullshit. And I'm like, well, what does it look like down here? It's the same thing going on here where we've got wicks and spikes going on, and I'm like, the bulk of the volume I think is in here. And yeah. Mhm. Mhm. Yeah. Yeah. Well, a lot of people don't hedge, but it is yeah, no, like it's good to have your mind on that for sure. But it's like a lot of people in this range I think are pretty much getting positions that haven't really amounted to any kind of long-term benefit. But that's what the kind of idea that I had in the morning. Like, you know, ultimately the entire dip I think is going to be bought back up, even with this dip that we're having right now. But the short-term moves that we were looking at were effectively just short-term moves. Of course, it's come back almost all the way now to this first initial low. I do think that it's interested in getting to this point. Here, I'll put it as a B point. That's gonna get some sort of attention there, which I mean isn't the end of the world, but we are farther out of the range than we've ever been before. So, it's more likely that we're trying to leave the environment, of course. And, we can see that it's been very much like an expanding wedge. And I think that expansion is going to become harder and harder to kind of pull off. Like an expansion to the upside again would be quite extraordinary to say the least. We do have a couple B points still untested down below. They're older though. I'm gonna take a look at them real quick. 5 minute. Yeah, these three levels right here, predominantly untested B points. This one being very out there, as well as this one. That one's just kind of like a smaller one. Turn that into a smaller kind of level. Just curious about those as well. We're not very far away from them. I'm just curious to see what they look like if we apply some fibs on there. So, of course, these give us levels, Fibonacci retracement levels that allow us to gauge, where some potential reversals could be. The 261 being a very, very attractive one, which lines exactly up with that predominant B point down there. So I could see, the need to get down to hit those B points and, effectively, it's another day where the market starts already progressing towards its target. You could say that it's not because of the American public that it's making these moves, because they've already began before people could start trading. A lot of people are oblivious to this, but it is true that, yesterday the market was already down before most people could start trading. So it's true that those that could benefit off of it the most were those that hedged or shorted before the new year. And who could do that? Well, as I said before the new year happened, I said that any hedge funds that are out there, they got to be crazy not to be hedged through the new year. Everyone's going to be drinking and off their guard, and having a little bit of a decline into the new year is absolutely fine. It makes people a bit timid about holding, so they sell. Who are they going to sell to? The people that will have the integrity to hold. And the institutions are going to have a good year this year, and it's going to have a lot of upwards movement. We will go through the high. Naive to assume any otherwise. It's not a guess. It's not a maybe. It's not a hope, but part of the plan. But I would say I would go as far as to say that if one thinks that we will not see new all-time highs this year, it's naive. It's literally naive. That's the way I look at it. And the one video that I am working on right now, it is the matter of uh, going over the highs. The highs were made on the day where I was like, there's going to be a meltdown. See, this is what the daily looks like. There's the untested B point. There's a couple other ones in there as well. I honestly don't think that it's going to go swiftly to these B points. I think that there's going to be an interest in getting back to this one up here. Oops. Right there. Basically applying a VWAP in there. See that this is the average price since the beginning of the consolidation. Keep that dimmed out actually. The third consecutive low does put some interest on the first of the three, which is obviously still the B point, a level that's debatably already been tested but still open for further testing in the future. Any movements that we do on the bottom of this node overall are subject to being placed on the top of the node as well. I think I'll use this song actually in the video. It's a pretty dope song. And I got to make a video on yesterday because that was huge. Yesterday was a freaking amazing day. I can't believe it. There's so much movement to be captured. It's insane. But I'm just like, I just know less than 1,000 people did what I did yesterday and could catch it with that much, confidence and and with that much precision. And I'm like, that's what keeps me going. Because I know that, unless you're in line with it, you're against it. And being in line with it, there's nothing that's more valuable than being in line with the market and having it respect your analysis and your decisions. Yeah, I didn't catch that one. I didn't try. You got it? Nice. Hey, morning. I also want to check out the other indexes too, because I remember yesterday they were moving so differently. See the spies, not moving too differently today. It was the Dow that was really moving differently. It was going completely the opposite direction. Today it doesn't look like that's the case. You got another one of those 50% retracements that we've been seeing pretty frequently throughout the day. I remember the first retracement throughout the day today that we had of significance. It was like this, and then we saw it again later in the day. This one ended up coming a lot more, but it does remind me of that first initial retracement that we had. 61 now, though, it looks like a little bit past it. Managed to go. Curious that it didn't get all the way back to the B points off the 161. Interesting. What it did do is produce another trend that's very similar to the one that we had before. So we're almost at the 188. Hmm. So far, the lows that we have, a low with a lower low and a higher low, provide a inverse head and shoulders environment. Obviously, it's not the crispest in the world, and it is currently the pattern, very triangular. Like I was explaining yesterday with head and shoulders patterns like this, when we get into this environment, it's very easy for it to be considered, triangular. You could consider it like this. Or even some people would look at that low, and I mean it's still kind of okay, but the thing that it doesn't change is the fact that this line here and this line here make a triangle. Whether or not it is within the head and shoulders or not, it's true that it's in that triangle, and I mean, I think it's a risky place to trade it in general. So it is getting exposure right into the middle of the node. The way that I see it is it's making people trade inside of the area. It's not effectively the best price. It's essentially went that far below and that far above, suspiciously particular. And doesn't mean it's not going to leave this area. I do believe that we will see the low of this green zone again, but matter of time. So essentially, in this environment, we could take a look at how a Wyckoff would fit over top. Take a look at that. Let me get the template out here. If we were to be considering Wyckoff in this case, the one component that we have in this, it's not necessarily a five-wave move, but it is a downwards move that begins the entire schematic. It doesn't really have too much of a preliminary support unless you were to consider this whole move the preliminary support of the environment. But then when it came off of that preliminary support, um, it made the selling climax, which I suppose you could say a little bit rough, to be honest. Maybe if you were to consider it from this point, the preliminary support, and it sold off and bought back up to that original preliminary support. Um, Basically like this. And then we have a little bit of a sell-off that's not quite as much as it typically would be. And then it rallies all the way back up to this high right here. And we've done that so far in this environment here. And that's that's visible there. I mean, it doesn't come from necessarily this larger dump, but it does have a pretty clear phase A in here, and it started phase B pretty well. Just beware that the next move could be to create that secondary test in phase B. Um, Now the thing is phase B has been the one that's known to fail, like the most. So anybody that did have exposure on the right shoulder from the inverse head and shoulders is also benefiting out of the pop of the top, out of the top of this triangle. Um, Beware of any tests back into the middle of the range. It's typical for it to have retracements back to the tips of the triangles. And if it forgets to do it in the short term, it doesn't mean it's going to forget to do it altogether. So can't help but notice that in the event that it does manage to get it a little bit higher, this is going to become a B point as well. So it doesn't make for a safe environment to necessarily drag stops above these levels. It does bode for a more difficult environment for the long traders, but ultimately, I think that they're going to get back to the green bar, even if it does take a little bit of time or has a few fake outs or pullbacks back to these highs, like I said. And also, in the event that it wants to get to the green and pull back the entire move to the tip of the triangle, then break the green, that could be on the table as well. Basically, we can see now we've pulled back to the tip of the triangle, and that's absolutely acceptable. In the event that we make it to this green zone, it could then again pull it all the way back, but it's that much less likely having already pulled back to the tip. Doesn't mean it doesn't want to do it later, but in the event that we get there very slowly, we may not need to come back so much. But if you think about it, when we do create a W out of this, in the event that it gets there on a crisp, clean W, this movement won't be considered played out. It won't be considered something that voids this B point. Like if it gets up to here, people will still assume that this is going to work out like a normal harmonic pattern. And, it would look like that effectively. For some reason, my Discord scrolled back to a time where I noticed this old post, which I think is really kind of interesting. It's easier to come back to every channel that is facing down that we are under. Like in the event that we're underneath a channel, like this bar here, and we've been trading inside of it and so on, get underneath that level. That's basically how we create those blue lines. I'm surprised that I didn't mention that in there. It must have been a long time ago. But sorry, out of where? In here? On the bottom or the top? Okay. Okay. Yep. A larger one. Like a 188. Where you putting your fib? Oh, like to this? Oh, from yesterday. Okay, let's take a look. To the bigger one. Yeah, I see that 161. I mean, the one thing that's interesting about that fib set is the 188 200 is down here, and that is right in my 227 241 for today's fibs. And but the thing is though, is there's some B points in there that are incredibly significant that have never been tested. Uh, right just beyond your 200, I've got a 261 with a B point. So that area is kind of controversial. Like I like this. Uh, Sorry, Susan. Just gonna. There we go. Now this is the B point. So effectively, anybody that's gotten exposure off of the 188 reversal or the right shoulder, this is a point at which you want to make sure it's made safe. Enough profit can be taken to keep a stop at the extreme. Of course, the major three drives down has been played out too. Like all of the drives have been satisfied by this point. Like I mentioned, it's very likely that it gets back to the green zone. Ultimately, whatever difficulty that it did have was just a mere retracement back to the tip of the triangle, something I said should be allowed anyways. That's the case. And if you kept your stop at the extreme, I mean, better way to do it. Now we have to watch out for the 61 on the upside here. But this entire movement, consider it has fibs. 61 is one of the next ones. That is the next one. Of course, that's just on top of the green zone. Could invite for a move that allows for a test back of the green zone. Something we like to step on. Something that can even get wicks and spikes out of the bottom. It's subject to having wicks and spikes that go even down to this level right here. So no stops are safe above that level. We can see we're just responding to that 61 now. A little bit of a negative response, exactly like this arrow depicts, just back down to test the green zone. All created from today. We did this range together. Absolutely amazing. basically chilling at this node right. Got a volume node right there that's actually taken over as the POC. As it currently sits with all the volume that's displayed on this chart, there's no heavier spot with more volume than the spot that we're at right now. Now the spot up here does rival it very closely, but with the added consolidation that we've just placed on this green zone, this spot now has more volume than any other visible on the chart. Now, of course, we can see that this is the 61 and we're using that pretty well. I'm going to go ahead and just mark this with a gold dashed line. I'm going to remove all the other fibs in that set, understanding that the gold dash line is the 61. We've got a nice B point right there. Basically, no stops are safe above either one of these B points. This one provides fibs that we can see here. The 188-200 does provide added confluence at the red zone, the high of the range. Now, I do want to point out that the distance that we made for the majority of the volume at the low of this chart, like this distance right here, if I place it on the inside, oh, it's actually on the outside as well. I'm curious about being able to put another node equal distance on the other side and what that would look like. And it's like it's suspiciously particular that that is the distance of the inside of the range. That the bulk of the volume from our morning session was contained within what? This distance. A significant one. It's also the distance that we had beyond. Like that's the distance of the major spikes we had here. Which I'm like I wouldn't mind seeing on the other side of the range. Could take some time, but obviously getting to the other side of the range is the first step in that sequence. Now, of course, with these B points down below, we can hit them more than once. Obviously, the 161 has been something that we've been using quite frequently today, actually. And it's been getting decent responses. Very intriguing that it didn't manage to make it all the way back to the B point, but a test of the green zone from the underside was more important at the moment. We can see that the purple line has been broken without much of a test at all, and I do think that that's going to be in the future again. Like I said, no stops are safe above those B points. We can see why. Like if you were going to drag it up, then where and why? And for those that did drag it up, then you know, we can, imagine what position they'll be in. It's like, well, where are they going to get back in? And then just notice that every point from now on out, we may be interested in overlapping the steps, like, making it a little bit difficult, because don't be surprised if it manages to come back and forth from the green zone and red zone. If it wants to do that at least one more time, should we make it so that it negatively impacts us? I'm like, well, of course not. How many times does it go back and forth in there? At a quick glance, too many times to count, right? So that's a lot. And I mean, if it does it a lot, well, we shouldn't be interested in dragging stops inside of this area so that we can just lose our positions because of the the fact that it wants to go from green zone to red zone or red zone to green zone. Something that it's typically allowed to do. Something that it can do. And anybody that does drag their stop in there, ultimately what they become is part of the node. And that's the interesting part about that as well. So taking off enough profit to be able to justify keeping a stop outside of the range is something to consider, um, in environments where you come into a consolidation and you're interested in getting to the other side of it. And in this case, it's not only just to the other side of the consolidation, but actually producing what we did out of the bottom out on the top of the consolidation. And we can see that, this level, it is the 61. I can just mark that in with the 61%. So we have an idea exactly where that is. This is a depiction of the average size of the candle. We can see that we're coming off of a really large candle. 18 points an average size candle on the 1 minute, down to 10 points the average size candle, which is still relatively high. The first we've seen here of that kind of ATR. It still remains the case that the B point down below is untested. See that there is a distance between that making it untested. The green dash line is ultimately a target for a bearish pattern. Doesn't necessarily mean that you have to position yourself for it, but it is something that I think that we should just allow to play out. Hedges towards it could be attractive in the event that it's not hit and we get to levels like this 188 200. you know Now the focus is, in claiming this green zone and turning it into a support, stepping on top of it and moving to the red zone. That could be something of an interest. Phase B did end early, to say the least, if this is a Wyckoff. But I do think that it is an accurate phase A. That's why I like to look at Wyckoff like I try to make it easier to remember the phases by breaking them down into sections that mean something. Because this is right now, phase A is phase A because it's first, phase B is phase B because it's second, C because it's third, D because it's fourth, E because it's fifth, so on. And I'm like, well, phase A likes to be accurate. That's one thing that I understand about phase A. It's the first one for sure. So it's the one people see the most, the one that people can recognize the most, and it happens the most. So it has the best chances of being able to form. In order for phase B to form, phase A already has to be accurate, or it's not really phase B. So that's the interesting part about that. Phase A is accurate. It's phase A. Um, it's one way to remember it. Accuracy. Phase B can be brutal and bad, boring, and there's many other things. Like it could be BS, like completely not good, like a bad apple. Like it doesn't the whole thing can fail. The rest of the pattern and the schematic doesn't have to continue forming the way that it depicts in the schematic. It can literally decide to stop doing the entire process in phase B and become a bad phase altogether. So that's phase B. It's going to be brutal as well because think about it. The entire time that it's in there, it's going sideways and triangulating. Every single move that we get in phase B is smaller than the last pretty much until it pretty much gets into this tip of the triangle environment where it's basically essentially phased out altogether. And phase C is the controversial one because phase C, it can be two things. It's like, oh, well, there's a whole other schematic for phase C, and that's the only one that's different. So, it could be a spike or maybe not a spike. Phase C, controversial. Phase D is when it's done. So basically the whole consolidation is ending in phase D, and phase E you better have exposure or it doesn't matter to you. That's the way that I look at that. Because what are you gonna do in phase E if you don't have exposure already? You know? So you've either caught the lows in the brutal phase B, or you're in on the controversial phase C spring, or the reversal, and ultimately uh, the trend break of that entire sequence. Right, like this, and you're in for that reversal and that continuation to the upside. That's a little bit on the Wyckoff there. But if we were to look at how the Wyckoff ended up playing out, I'm like, okay, let's take a look at the phase A as we saw it earlier. So phase A had the preliminary support, which was right here, and then it had that selling climax, which is right here, the automatic rally, which is right here, secondary test, which is right here. And I'm like, damn, that's accurate. Like very, very, very clean, crisp phase A. And you can see, unfortunately, that's where everything comes to an end in phase A. And then what, phase B, it starts out, pretty decently. It's like ding 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 ding, goes all the way up to the high, and it's like, oh, I'm gonna do this part now, and it's gonna come all the way crashing down, and it's like, well, hold on a second. Didn't do that. I did this. Where'd that come from? Where is that in phase B? I mean, why make phase A so accurate just to not do the rest of it, right? Because I'm like, oh, I can see why. But like, this is a huge waste of time. Think about it. It doesn't really benefit the best traders in the world for it to do this. This is terrible. Like we went over yesterday. If I just merely, roughly consult, like draw over what it's doing here, like that's not really attractive move, right? Like it's sideways. The bulk of the movement is contained within a sideways range. Like it's telling us that it's got resistance lines and support lines that contain the entire area. You can see that it starts with this preliminary support, and like it ends by trying to like climb its way out of those resistance lines, right? So that's one thing that I can see very clearly. Now, of course, here we are making more spikes underneath the green zone. I just want to point out that, as this is going on, it is a fact that this line has now been created where it has not essentially been able to before. I find it very interesting that they're using this angle on the bottom as well. An angle that, not quite this one, close though. This is the line that's the elephant in the room, and it's subject to being the thing that can change the situation. When this line breaks, we can change the characteristics of this environment. Right now, we're in a little bit of a channel. A channel that it hasn't really been used anywhere else. Like the last channel that we were in was down here. It had suspiciously particular angles on the bottom there too, where it suspiciously doubled the entire range before starting another one. And it's like, okay, well, is that not a fact? I'm not making that up, right? So it's like it's true. Like it did double this entire environment, and like as soon as it was finished doubling that, what did it decide to do? Well, almost like a smaller version of what it did in here. right? I mean, yesterday, uh, if we can just go down to yesterday and remember what this looked like. These are the patterns. Oops, sorry. These are the patterns of the moment. And I'm going to do another one of these posts right now where this is the large one, this is the small one. The small one is subject to doubling as the big one did. And we end up going to this. So that green dashed line. So basically, we can see we had a large version and a small version. And I dragged the large version and the small version over top of the environment here so you could see exactly what it looked like. And if I take a picture of that and show everyone, you can see that that pattern right there exists inside of this movement. And then it did a smaller version of itself. And ultimately, it was projected to be able to play out to that level right there. And that's exactly what it did. Like that. So let's break it down a little bit here. So is it not true that we do have a consolidation that begins it, and then it runs to the other side where it kind of creates like an M? And this is a little bit short term. I think another attack on the 61% retracement is imminent. Um, the construction of the inside of this movement is not the same, but it is undeniably very much like a W into an M. Like this is what it has done so far, where many people can recognize the harmonics environment straight from M into a W. And then it's gotten undeniably sloppier as it's continued on. But in this environment that we had here before, it shared that M into W kind of movement. It was like an all-in-one in a really weird way. We were provided with an M first, and undeniably left in a W, making everything into a W, including this whole huge thing right here. I'm like, wow, could this be like an M to that W? I'm like, well, that's an idea for you. Of course, this yellow line at the bottom, it's not yellow, it's blue. They all have different meanings, so we'll go over those meanings quick here as well. If you ever wanted to check them, just type in legend. Basically, here we are. The blue lines, they're abstract lines, they're barriers, uh, basically lines that aren't your ordinary trend lines. They're levels that can provide obstruction when you're on your journey towards a target. Basically they slow things down and provide resistance barriers that can work in confluence with other levels. Like if you've already got a reason for something to reverse and there's a blue line there, well, it might be that additional signal that you need to gauge that environment, depending on how it's placed. Yellow lines are your ordinary trend lines. They break with impact to typically change the trend. The red yellow lines, they're very much like the yellow lines, except more important. They break in the opposite direction always, just like a yellow line. And it's supposed to be with greater force or more impact, but basically, I like to make them red yellow because I don't want people to miss them. Like, I want people to understand that these are the lines that can break with the most impact and change the most things when they're broken. The green dash lines are very similar to profit targets. For the break of the red yellow line only can they be considered. Like in this case, it's true that we can never get to the green dash line until we break the yellow and red one. When we break the red yellow line, it becomes a consideration contingent on the fact that the red yellow breaks. If the red yellow is to never break, then this is to never be a target. But for those that have exposure to the red yellow line breaking, have exposure to the target as well. I couldn't say it any better. At the end of the day, um, the blue dashed lines, the previous price targets that are still of interest, your green dash lines are typical price targets. Like you can see, we've come down to hit these other green dash lines. I'll remove them, as we hit them, and you know, basically that's absolutely fine. What we're left with now are ones a little bit higher. And of course, we've got the gold zones. They're of high importance or high interest. We can see that I've got this one marked with a 61% retracement. It's a 61% retracement of the entire dump, which means that out of this entire dump, returning to that gold line is 61% of the way back up to the high. We can see that we're now testing the red yellow line and interested in breaking and retesting it from above. Allowing it to test from above is something that is important. You can see that it's doing it right now, as well as the green and red zone and the purple zone. Um, when we have the green zone and red zone, it means that we're identifying the support and the resistance to a consolidation or a confinement area, an area where the price is confined within the red zone and green zone, the green zone being the low, the red zone being the high, always, and the purple zone identifying the middle. So sometimes, if I have a green zone and red zone, I'll identify the middle with a purple area. If it has a specific middle area that has to be identified as a range, I'll make that the purple zone. If it's just generally the middle area like this one, I'll make it just purple just to, show us that the green zone and red zone relate to each other. As well as if there's two ranges, I might use another neutral color for the middle, like blue, to differentiate between two ranges. If I've got one purple one and one blue one, well, you know, it's absolutely fine. And come and if we come back to it another day, I'll have an idea of exactly which one we're at and how it was responded to in the past. So, it's not just gibberish, it's not just artwork or anything like that. It's literally, math, and every single color means something. As well as one line that I haven't got on there, which is purple for, these trend lines. They identify symmetrical triangles, and basically they just mean that they're parts of triangles. Um, and I keep them on there for uh, the usage in the future. Because like this triangle, it ended, but it came back to use that line and to test it, which is absolutely okay. We can do that. that right? Like, is it like a 5-wave move? What do you mean? Yeah, okay, okay. Like from here to here? Yeah, 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 yeah. I like that. Yeah, maybe it's from here that I could start it down to the end over here. Things can change right about now. That's interesting, that little area right there. I think that that area can mark the wicks and spikes that we had. Like if we look at the distance that it's made here, I think that that's suspiciously particular. Be surprised if we had that distance come. Oh, is that strange or not? That's how much distance we put on top of the green zone as well. Hmm. Distance put on the red zone, quite the green, but from the inside of the green zone to the outside. Notice that distance can be respected. Curious about that. Like part of me wants to take this, drag it into here, keep that in there actually. Because you know what that would do? That would uh, be AB equals CD. Now what's funny about that is what's it? Mm-hmm. Mm-hmm. Up then sideways, yeah. And this is kind of strange that we didn't, you know, consolidate before the green zone. Because it's like how we make it through green zones is undeniably different typically than to what we have right now. Like what we would usually do, you know, is like we would have fallen beneath it and everything like that, chopped, ran up to the view app, and then started, or not the view app, but the green zone started chopping it, and then eventually had made it through, um, and then eventually make it through. Why does it do this, right? Why does it do this? Well, because when we get to the red zone, it has something to fall back to. And I mean, it's not like it's not making that node right there. Like, look at this thing. It's huge, right? That's what we've done since we've been here. This, wow, it's gone now, but this loads right there. That's it. That's all the volume we put there. That's our green zone node, you know? We're going to conquer the green zone, step on top of the node, make it to the red zone. And it can be difficult about it, but more of a node created, the better. And I can't help but notice that, if we take fibs from where we currently are right now, if we came down to test that low of that node, that could be an interesting, like, kind of snap around. It would be like a 61% retracement to this move right here, right in there. So I'm kind of looking into that. Obviously, with stops kept at the extreme, it's not much of a threat. You know what I think's going to happen actually? You know how we've been very much using the green zone as a resistance? I think that we're going to use the red zone as a support. Like I've seen this before where it's like, hey everybody, look at how clearly the green zone is used as a support. It's meant to send us up. And then hey everybody, look at how clearly the red zone is used as resistance. It's meant to send us down. Let me show you. Okay, everything goes up off the green zone, down off the red zone. Now, wait a second, look at exactly what it's choosing to show everybody it does now. Is it not true that this is exactly the opposite of what the green zone is supposed to do? The green zone, for everyone in the morning, has shown them that it's supposed to go up off the green zone and down off the red zone. And right now, undeniably, there's been no up off of the green zone in this entire consolidation. Anybody that expected the green zone to work the same way that it hasn't been treated well. So it's like things have changed significantly to how we use this environment, even though we're here at the same levels. We're not using the same levels the way that we did the first time that we ran into them. And that's something that I think is really clear in this environment. It does not mean that we won't get on top of the green zone. It just means that it's difficult for the people that don't recognize that this is part of the process. And, making this node below the green zone, spiking everybody out, overlapping all of the people that chased out of this consolidation. It's very, very common to make that 61% retracement, so allowing that to happen is pretty necessary. I do believe that these lows that we've created in here are going to have an interesting test as well. So, I mean, some would already consider them, getting their like flutter basically that they get as they're creating this B point. Sometimes they like to test them and doesn't mean they're not going to be tested again, but it is a B point as of now. And I'm like, okay, for what we did on top of this area, we're doing below this one. And I'm like, that's fine. We have that right now. We can see we're testing it again, and it's like it's even on both sides. The one thing that it's missing is this. That's why I put that there. One thing that it's missing. And what that would do is get us to the 61. Undeniably, we've had many 50% retracements today, and I believe that's where we are. The 50 could work because it is part of today's characteristics, but allowing for a 61 is a lot safer than assuming that the 50 has to hold. Because God forbid it makes the 61, you lose your position. And while it's busy reversing at the 61, potentially you're just losing the position instead of either buying into it or holding a stop at the low. But you know what's interesting about 11 low zone is it almost goes down so much in the 11 low zone and makes people think that going long is so wrong so many times that nobody will be in for the actual reversal. What happens after the 11 lows? Does it not reverse? And like think about a Wyckoff, for instance. How many lows does it make? How many times does it break the trend before it actually reverses? Like if we look at just your average Wyckoff, you can see we're stretching down to that 61 now. I'll go ahead and put the fibs back on. I know they apply so many lines, but this is the one that I was interested in right here, 61. But if we take a look at that schematic, we can see that we break the trend first here, and then we break it here, and then we break it here. And throughout all of those smaller trend breaks that we can see, they can happen on the short term and break a lot more frequently. Like there could be 3 in there. And then here, it starts with that small first fake break. Second time it doesn't work out well. The third time it does, and then it breaks this one here. It goes on to break that one there. So another 3 trend breaks easily. And then how many times does this one threaten to break or actually getting away? It's almost like it fumbles that trend break quite well. So one of the moves that we can expect is a move back up to test the blue line from underneath. I'll make it blue and white so that it stands out. It's part of what typically would be wicks and spikes. We can see that this is the low of the node altogether. So basically with the blue and white line, it expects enough profit to have been taken to be able to withstand a test of integrity after the test of the blue line. So just like we can see here, the people of this consolidation below, they've had a pretty substantial run out of it, and then that entire run from the moment that it got exciting has been taken back to the point that it literally was not exciting. And that's exactly what happened there. And you know where it came back to? The right shoulder. The original right shoulder that we were looking at in the morning when we looked at this inverse head and shoulders pattern, a pattern capable of reversing the market downtrends. And that's what it has, the component of coming down from a downtrend. Now we can see that it did return back to the blue and white line. Anybody that targeted that blue and white line must make sure they're safe for the test of integrity. This is the test of integrity. Basically, it's like a slap on the wrist for people that don't understand the market's minutia. It's like oh, you didn't take profit there. Well, here's incredible uncomfortability. It doesn't mean that it's gonna make you into a loser, but it tests the crap out of you. It's like, oh, you must really want your position now because we're coming back for all of the profit, just like we did here. It's like, oh, you must really want it now, right? And they just did it again in here, where it was like pulled all the way back nearly to the beginning, just to make sure that nobody dragged their stops up. And what have I been saying since the moment that we left that right shoulder? You keep your stop where? At the extreme. And if you've done that, you don't have to take part in this game because you're doing it the right way. That's interesting. And you want to know why it's important to do it that way? Because otherwise, people might take risks at higher points than where I've already indicated, value, and they might burn their hand, whereas they could already have a position that makes it so they don't have to take a risk here because they're already in. So that's the benefit. And if, people are in from anywhere before this year, you're looking pretty good in the short term, at least. Getting on top of the blue and white line can invite a retest, and it can involve this node. As time goes on, the blue and white line and the blue line are both going down, but what does remain is this one, this node right here. It's ironic that it just like disappeared as I circled it, but there is a node here, and I did highlight it because there is volume there. Just because more volume is showing now, it dilutes that amount of volume that we were considering originally. So it doesn't mean that it's not there. It doesn't mean that there's not volume that exists there. It's just that all of this volume is now showing, and it trumps that small little area of volume we were looking at. But allowing for it to get tested is important. So what I can do is, basically draw in this like little area here and give us an idea of what we should allow it to test. Because where that comes from is all the way back here. Not necessarily a gold zone, but I can make it like a neutral blue zone. And I mean, this is giving me phase A vibes all over again. Deja vu in the morning. Like we have that preliminary support, selling climax, automatic rally. What do we do? The secondary test, and then try to do our continuation, just like we did here. This is the same pattern. And I question the 61 to 61. It's not really like the 61 down at the bottom held very well, but it did a very particular thing. Was it not true that it did come back to the blue and white line like a spike? Whatever was sold off past that 61 was bought right back up as quickly as it was sold off, no? And did it not go the distance beneath? Exactly the same distance that it went above. Sorry, I didn't mean to take that one over too, but it's strange, isn't it? Strange that that appropriate spike that we've seen used as the spike throughout the day has been used as a spike beyond the 61 to make people that are otherwise like, so adamant about it being precisely the 61. Like to me, I still think this is a 61% reversal. I don't think that it was the 78. I think that that everything was bought back up past that 61 so quickly. It's an illusion that we reversed at that 74 and 88. Interesting. I do think that the volume that we had in that area is relatively insignificant in comparison to what we had at the 61. But this is that kind of pullback that we got down to the blue lines. That's interesting that it's, yeah, for me it wasn't a 261, but it was a from that one. I guess it was from this one that it was a 261. I'm just like I don't know about that one. That's just rough. It's like forcing the fib on there to try and make it work properly. I just there's so many other ones that could have been there, and I mean like to pick this one as a B point, the one that was like literally fluttered many times, and then finally it pushed through every single one, disrespected the 188, and finally landed on the 261. And I mean the people from here that have been going from that B point, that's taken a long time too. I'm like, I just don't think that that's like a repeatable confluence. But something like this, where we have a spike out of the top of the 61, spike out of the bottom of the 61, a blue line to trade back to in the short term, like I said, to make it safe by the moment that we test that level, because there will be a test of integrity. And then when we break it, we come back to step on it before we break the red yellow line. And that's the next step, breaking the red yellow line. And I'm like, well, this is the sequence I rely on. And it honestly doesn't have anything to do with fibs. Not past the 100, just the 61. And there are no fibs that mark B points. Like this is a B point that's untested, but I think it's a shame to sell some there. Honestly, I think it makes you cut your position in the middle of the node, and that's tough. If you really think about it, it's not a place where I think it's respectable to reduce the position size. I think it's the green zone that people are going to be, well, not people, but the best are going to be looking for. And then I'm like, well, there's this B point for the original 261. That's where the node begins, but then I'm like, well, is that something that's going to prevent us from getting up to the green zone? I think that we got to put a little bit more merit into this VWAP coming from up top. I think we might be able to get involved with that. Let's put another one down here real quick. Yeah, that's just been responded to. Interesting. Okay. Part of me wants to even consider this as the preliminary support. Selling climax, automatic rally, secondary test. Phase A, very clear. And, when I see that phase A can be like this, it reminds me of the other day where we had a significantly higher preliminary support. It was like, oh, yeah, like even like this, where we have preliminary support, selling climax, automatic rally, secondary test, and we return back up. Technically, all the components are there, but now we have a new trend here. Obviously, we have to break that yellow one in order to get to the red yellow one, so it becomes a consideration. Of course, we did come back down to test the blue lines as well. Stepping on top of them is quite normal. Yeah, this is one from a different day that was used in a different way. We can see that it was created by these two lows, and it had an interest in coming back to test it from the underside, and it formed the wicks and spikes out of the bottom and continued to have wicks and spikes out of the bottom. Even this, just because it's bigger, does not mean it wasn't bought back up as quickly, if not quicker, than it was sold off. Interesting. That, wow. Okay, 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 okay. This blue line means a lot more than I thought. It's actually part of that channel that we were using. If I scroll out and you take a look at this channel, the channel that I think it inevitably will again in the future, and to recognize it will be imperative. So what we will do is make it stand out, just like the other one. Because I'll be damned if we get to that one and think it's just an ordinary blue line. And you know what it really provides too is opportunity. It means that everything everyone's fighting for ends up at that line. Yeah, sure. Technically, if it takes this much time, it'll get there. This is a factor you have to understand. If it takes that much time, it will get there. Technically, it could get there by doing that. I don't think it's going to do that, but ultimately, the journey to that level, I think, will involve upwards movement. May not seem like that right now, yeah, but this consolidation will end like every other one, or we'd still be in the last one that didn't end. If consolidations were potentially prone to not ending, we would be in one of the ones that didn't end. But every one has ended to get us to this one. So this one, like every other one, will end also. That's the idea. And if not, how not? Which consolidation haven't we left? So consolidations end, is my point, in a nutshell. All of them, or else we'd still be in the last one that didn't end. And what do they do when they end? Well, if they didn't leave the area that they were consolidating, they wouldn't be out of the consolidation. So let's say, for instance, in a simple environment, we have a little area like this. It's confined within those two lines. It can't leave, and if it does, it's out of the consolidation. So what can we do then? Well, by default, in order to end the consolidation, it has to break one of the barriers, either the high or the low. And in order to do that, it has to break one of the barriers. But when it does, what is it subject to doing? Well, doubling at the minimum. The direction is not depicted by just the fact that it has a green zone and red zone. There's more to the construction of the range that depicts which direction it's going to be interested in leaving. But just because it has a green zone and red zone, it doesn't tell you that it's going to double up or going to double down. But the amount of movement that it is likely to have when it ends the consolidation is likely to be double the movement that it has within the consolidation. So it's likely to make more than twice the size of the average move when it leaves, in other words. Not always is it the case, but more usually. And not always does everything have to be viewed on a horizontal platform, but on a diagonal one. Like it is the case, like I said, when we break the red yellow line, that the green dash line can be considered, but only contingent on the fact that the green, or sorry, it's contingent on the fact that the red yellow line breaks that we get to the green. Now, the first step in that is getting to it. Can't get to the green, or if we can't get to the red yellow, we'll never get to the green. Now, we know that there's a yellow line before this red one. And in the event that the yellow line breaks, it's like one door opening towards the red yellow line. Now, of course, the blue and white line is very close to being tested. We can see that just beyond this level, there is barely any volume. Now, what's very strange is the fact that there is like the world's smallest range inside of this area, and it's got a very small green zone and red zone in here from a previous day. Now, it is the case that we've retested this low and made a new B point to create up here. We can see that it is in fact a 1, 2, 3, 4, and 5 waves down. Like Elliott wave, 1, 2, 3, 4, and 5 waves down. A bullish reversal pattern. However, much difficulty has been made for the people of this consolidation, and it wouldn't surprise me to see that continue up until the break of the red yellow line. And it's true that even in the event that we play out back to the B point, it's not like it doesn't have a lot of time to make different patterns. Short term, green zone to red zone of this very small range. Like why on earth was I compelled to draw a range in there? It must have had the slowest ATR last time we were here to draw in a 5 point range. I'm like, really? 5 point range? Must have been a very, very small range. Here's that B point target right there. Short-term traders must be profitable by this point. If you allow it to become a loss, you're doing it wrong. At the end of the day, there's no way that when it hits a short-term target like that you can't take off enough profit to make sure that you're safe to continue holding. And it's very, very much the case that they like to test the integrity. Dragging your stop up into a 5 point move isn't necessarily the best idea, or an 8 point move, because of the fact that the average candle size is 6.6, right? How much does our average candle pull back into the last? If you could get an average of how much each candle pulls back into the last, do you think it's halfway or more than halfway? More than halfway. Each candle does. And how many candles don't have any pullback on the next candle? Even the ones that look like they're gaining very much progress, like notice that when we make this candle here, it has a pullback by this much. And when we made this candle here, it had a pullback by this much. And this candle right here had a pullback by this much. Very much like a 38% retracement each candle has. And obstructing that from happening is tough. And I can see that this is a time where they're trying to basically chop everyone out before they break the red yellow line. A test of the blue and white is normal before trying to go for the red and yellow. Now, of course, it is the case that this spike is higher than where we are testing now. Even more difficulty. It's like an 11 low zone environment. And it's like now, the only people that remain are the people that formed the spike at the very low. And you can see how much volume that actually is. Only these people are allowed to remain in, which isn't the American public, unfortunately. The the chart would have us believe that nobody is responsible for the reversals at the best prices because the American public does not put volume there. Somehow, all of the assets reverse on a lack of volume at the extremes and nobody notices. And you want to know why? If you research dark pools, I think they should be made illegal. They're for institutions with more money than they know what to do with to be able to trade where ordinary people don't recognize their volume. Notice that this line did break. I gave the reassurance that the yellow uh, is the door to the red yellow. Now breaking it is like starting the journey. Because it's like imagine that we're contained inside of a room, and I do this sometimes, this explanation, and it's like the only way to leave it is by exiting through the door. You can't phase through the door or anything like that. We're talking seriously, you're in a room. The only way to leave it is by opening the door. The first step is going to the door and then opening it and then crossing through it. And then honestly, a retest is kind of like closing the door behind you in a weird way. And it's part of the process. It's like anybody that caught exposure to the trend break, basically they're in that area, they break the trend and it comes back and then continues. And it's like we can see that with every single trend break if we wanted if in a crisp clean environment. Now, of course, things like this can happen where we break a trend and then it comes back for the retest and fumbles through the retest and continues down. Other times, you can see that like this one, it breaks through the trend and cannot even make it all the way back to the retest. In some cases, this is the way. And I mean, that's a hell of a change, isn't it? From being able to not even hold the retest to not even get back to it. And I mean, what is the cause? This ridiculously small 5 point range. Well, I'll tell you one thing about this ridiculously small 5 point range. Is it not true that it stopped this move for the longest period of time since it started? Second, is it not true that the movement that we had out of the bottom of the green zone could be matched through the high of the red zone? Like it managed to make a wick and spike on both sides of the range, acknowledging that the green zone and the red zone, you know, exist. Now we continue on to break through the yellow line in aspirations of getting through the red, yellow, and onto the green dash line. Now, of course, only those that are exposed to the break of these trend lines are positioned in the right way. If you buy after the trends break, then you're not good to go. So that means anybody that's positioned should be in from underneath these levels. Because where did I place the trend? Here to here. That means there's been an opportunity on these two lows right here. Just these candles right here. Because everything before that was the trend. Like, I mean, you couldn't get this trend without placing it here. So these are the two candles that provide the opportunity for the reversal. If your aspirations were that the retest of the white and blue line could lead to the breaks of these levels and exposure to the red yellow line that could lead us through the high, that's absolutely fine. Guess what? If you kept your stop at the extreme, even if you didn't catch it, like I don't care if you started your position here and then you sold some off, sold some off, sold some off, and then kept your stop at the extreme, guess who didn't have to play this game? But what was the strategy from the right shoulder? Keep the stop where? At the extreme. And who didn't have to play this game where everybody else is fighting and fighting and fighting. At the end of the day, the red yellow lines have been notorious for getting initial negative responses that test the integrity of those that are exposed to the break. And then after the negative response, we can even get another retest, which could be considered another negative, really. If you break through the high and then we come back to retest, people don't like that. They don't understand why it's necessary for it to pull back ever. Because when they're watching the profit and loss, they get built into a relationship with that number. They're like, oh, I see $600. I mean, like, I don't like to see it come back to 550. And then every time it comes back to 550, it's like a blow against their emotional willpower. And ah, I'm like, ew, that's not good. Don't be like that. Like that's weakness in my opinion because it doesn't give you any control. It makes you hope for the profit that you had. You don't know why you had it in the first place. And I'm like, well, could we not just focus on the target? It's human to be like that though. That's why I mention it. So that if you are like that, you can change. Because I didn't like being like that. It's not like we're born to be effective traders. We're born to be terrible traders. We have to learn out of it. The market is designed, in my opinion, to work against the average human being. And as long as we understand its particulars, it's absolutely fine. Now, it is true that those that expected the blue and white line to act as a support that could break the red yellow are now exposed to the potential profit of what the green dash line can offer. Now, the green dash line isn't something that effectively means that it has to stop. And in fact, one of the most effective things that we could do right now is actually chop more and then break out of it. Because if we don't break out to it, we break out through it. And if we chopped more, it would be even tougher for a lot of people. So continuing the consolidation is it would be my go-to. I won't be surprised if that's what they choose. And undeniably, it makes it more difficult. The people that are trying to catch the lows in the consolidation to withstand these tests of integrity. Where, if you really look at it, I'm like, well, was it not okay to allow for the yellow line to get tested here? And now all of a sudden it's not okay to allow this one to get tested? Very interesting. And with the amount of equality that we've had lately, what should be allowed is truly the same distance on both sides of that 5 point range, which could look like another test of the blue and white line. As of now, very close to the original reversal point in this consolidation. Yeah, it could be. I mean, it's borderline touching the head here. Hmm. Yeah, the thing is though, is like when I see head and shoulders that are like like this, it's not it's not something that I like. I don't think that it is like a head and shoulders when it does that. Because like this is a head and shoulders. There's a big difference between this one and this one. Because this is capable of reversing an uptrend. This one is supposed to continue a downtrend. I wouldn't be surprised if whatever continuation it gives is just in wicks and spikes, and literally anybody that's positioned for the decline of that is part of actually the reversal that breaks this entire trend and doubles it upwards. That could be an effective reversal. Um, Basically, what we could see sometimes is that it produces the head out of the neckline, and in doing that, what we've noticed in the end of last year was that it can actually produce an inverse head and shoulders and then continue going up. Where this pattern is at the end of a downtrend. Um, Hold on a sec, I'll move this over like that. So it goes down and then it makes the left, the head and the right. That's not bad. The next time we get to that red yellow line, I don't think that it does a fake break. I think it's conditioning people to think that this is what it does when it breaks that line, and we're closer to it being able to break properly than ever before, contrary to popular belief, because they think that it will continue to be the way that it is, and I say that it is more likely to change than to provide the same results for people that they've just experienced. Because it's unlikely that the people will assume it will change. It's more likely that they will assume it will do what it just did. Very, very strange. Because when people are taught the basis of technical analysis, they're they're taught that there is patterns that have happened in the past and they can happen again in the future. So what do they think? Oh, when they see a pattern, that can happen again in the future. And I say it's more likely to actually change and and happen again in the future, maybe 2 weeks from now, but you won't remember it because it's like you'll be too interested in what's happening in the now. And I'm like, that's one thing that I've recognized is that things do happen again, just not right away, essentially, all the time, um, like people would think they would be. But when you find the same kind of range and you get two patterns that are exactly the same at the same level, you know, and this one goes up and this one goes down, that's when I think things really start to get interesting. Because I look at it as a form of a squeeze, like it's like it's churning people out. Because you could bet that after seeing one pattern work properly in a consolidation and then seeing one pattern effectively slump, that'll take out maybe 15% of the market participants. Like, I think that by the time that we get to this one, it'll have maybe a quarter less people than this one did because of this difficulty and prolonged wait. This will have that much less volume, and people, they get sore about it. And like I said before, it made this dump, that sideways movement to the green dash line, ultimately using this range and making things even out of both sides of the green and red zone. We could see that before actually breaking that level. And I mean, we're pretty close to making it even. Just remember the one thing that we acknowledged when we first used this zone. is that things were trying to make even wicks and spikes out of both sides. That the range didn't need to be acknowledged more because it had the capability of stopping a move like that. And it wasn't just stopping it, but it felt it. Like it felt a decent move off of it. And then it came back to make things even off of a level that it felt, and then come back to acknowledge it like it has recently here. I'm like, that's suspiciously particular. Another trend could be drawn. Take some of the old ones off. This one, kind of dim it out a bit because it's been broken. Doesn't mean it doesn't exist. But this is the this is the downtrend that effectively is going to have to break to get to the red yellow line. Successful break so far. We're back in the range. Things have been somewhat even out of both sides. Obviously, this is a range where they don't want you in. Obviously, the name of the game is to try and make it as difficult as possible for people to be in on the trade that is right. Ironically, it means that the entire morning can be uh jabs against the people that have the best thing. And I mean, that's like an 11 low zone. 11 low zone's like a multi-low zone. You know how it originally originated was, we would have something like a very clear pattern in the morning. All right, like really, really clear. And I would draw in. I would write like clear, literally clear, and then it would go up, 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 and then it would start chopping, and everyone would be like, "Wow, what a nice morning," and everything like that. And then it would go all the way back down to here, 78% retracement. Start chopping, chopping, and continuing to chop on top of all these people with their clear entry. So I'm like, yeah, if this dump didn't get them out, this chop likely get them out. Now you want to know what it would do? It's another cheeky move where it would have like a support like this, and it would come and be like, "Oh, everybody, it's going for the B points up here," and it would come up. It would respond negatively to this line, come back and chop everyone out, and be like, "Oh, you still want it? You still want this entry?" Then finally, it would break it and give them the B points. After all that, but the people in here, they get absolute chaos. And this is where we're at right now. Where the people back in the day where I'm like, I could show you how many clear entries in the chat that I said to hold from. And everyone wants to fight this. It's human. It's human. But I say when you capture this, you're not interested in selling up here. You keep this. Hedge down to this environment. Because does it matter if you've shorted up here and it goes down, 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 and you take profit even here? Doesn't matter. But if you're trying to buy down here, oh my goodness, you're working the whole time. Just working, working, working. Why? Part of the bandwagon of people that don't understand what's going on. And I'm like, you can count on the fact the hedge funds have their assets from the clear run in the morning. Most of the ordinary people have given it up because they can't take this environment. And the hedge funds, don't be surprised if the hedge funds hedged at the high, made a bunch of money on this, kept their assets from the bottom. All the money that they made from hedging, they could have accumulated more assets for the continuation. Whereas everybody else is just victims. Victims to the chop, where it spends 80% of the day chopping down low and taking back the majority of the move. Where it gave, and most of the people weren't ready enough to be part of this one in the morning because it happened at the open, or it happened pre-market, or it started at 2 a.m. And by the time that it's already up here. It's like, oh wow, the market's reversed so much. And it's like, meanwhile, the American public had nothing to do with it because it started at 2 a.m. in the morning, Eastern. I mean, like, that's an interesting environment. Why is it the case that that's happened so many times? The people are just completely oblivious to it. So it's kind of interesting. And what they'll be interested in is when it makes that entire move, he'll be like, "Oh, why did it move up here? Let's check the news. Let's have them tell us why it did it, and have them tell us why it dumped down." And then as soon as they read it, they're like, "Oh, okay, that's good enough for me." Content. And that means you've lost all your control and you've given it over to the person that wrote that article. And I never do that. Never. I'm not interested in any kind of news. Just when the time of it is going to happen, I don't care what they have to say about it or what's going on. All I know is that it will increase volatility. All of the ordinary people will show up like they've been called by the shepherd, and literally they will all be seeking to feed off of that news. And somebody will be interested in feeding off of them, and they don't even know it. And that's the best way, because if they don't know, then they're easier victims. Basically, that's the interesting part about it. Is it not interesting that the people that kept their stops at the low, even if it comes back to get you, you know what? You didn't have to catch this low. 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 God forbid you were wrong on any one of those lows, because you didn't have to take any one of them if you just held the original strategy. Keep the stop at the low. And yeah, sure, if you want to start catching the 11 low zone after all these lows because it knocked you out, fine, whatever. You got all the energy in the world because you haven't been trading this crap down here, right? Because what does it offer to anybody that has traded it? A headache. It's true, is it not? Is it not true that just keeping the stop at the extreme is significantly easier and it keeps you out of this bull crap? If it's not meant to actually hold the lows, then start catching it beyond the lows. But here, I mean, it's not. It's you can tell that it's not the best traders that are part of it. It's people that are they're in a trap. Everybody's been like, how is it the case that every single one of the trend breaks since this point hasn't been a trap? It's amounted to everyone that has gotten exposure to them having to try again or accepting a loss. So it's like, wow, interesting. Not to say that every single B point that I've put in that range hasn't been taken off successfully before it's come down to a new low. It has. And every single trend break has broken in sequence as it should. And every single retest has happened as it should. But everything also remains above the low. And everything was even out of both sides. And by the end of it all, it will not seem like it went down, but it will seem like it went sideways. And that's exactly what we wanted it to do. By the moment that it was at that high on that red yellow line, I was saying sideways. And, ultimately, doing this is one of the best ways to acknowledge the fact that everything comes back to the middle and everything ultimately was BS that tried to leave that middle range. And since we've hit this point at the beginning, not a single move has amounted to being able to leave this area without returning back to this point. Now, I'll tell you one thing. Is it not true that if we want to continue trading at this stupid level, we can't do it without breaking the red yellow line? Is it not true? We have to break the red yellow line to keep using this level. How can we stay inside of this area and not use the red yellow line, or not be in the red yellow line? We have to break it, right? So things are going to change right now because we can't keep the same environment that we're in. Because the environment that we're in right now has been trade inside of this little crappy green zone and red zone, make everything even around it, and stay underneath the red yellow line. Now it's impossible for it to do that now. Impossible for it to have that same condition. Things have to change undeniably. People will have to understand that one of those two things will have to end. Either the red yellow line has to keep us away from those green and red zones, and we have to continue going down with it, which is like, okay, hard to believe. Or we could say, screw the red yellow line. I like this range a little bit more. Let's use this, make it sideways, make it even, and then say screw the entire range and go through everything and end up at the VWAP at the top. And ultimately, yeah, that's what I think is going to happen. Keeping your stop at the extreme gives you exposure to all of this stuff and you get to watch the show. That's what I say about the 11 low zone is like a show, like you watch a play or something like that. Because you get to watch everyone just jumping through hoops for something that you already found value in. From the moment that it lifted off, it was the case that the market told me stop at the extreme, not to drag it up. And I mean, these are the moves that the market has presented today. And did you know that the lows that it has given here are not better than this low? And they're not safer. So it tries to make people fight for something that's not even as good as what it did offer in the morning. It's basically giving everybody the right shoulder level again. That's where we are. We're at that right shoulder level. And I mean, let's say for instance, if in a hypothetical situation, if you took 10 here and you took off 9 of them there, right? You know that in order to make that last contract that you have a loss, it would have to go down like hundreds of points, right? In order to make it a loss. So what is it to keep your stop at the extreme? You know what it means? It means that that one contract is preventing you from taking a risk here, 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 and it's worth it, even if it has to come down. It means you're accepting the fact that until it makes a new extreme, you're not working, and you're going to be profitable if unless it makes a new extreme. And it doesn't matter if you caught it or not. You've managed to take off enough profit to secure the fact that unless it makes a new extreme, you will be profitable. Now, is that not something that's worth working towards, right? Yeah, 100%. So every single day we want to. Mhm, mhm. But I think it's really important to understand that working towards a hedge, working towards a strategy, it's not something that's ever going to fall into your plate, right? Like to have a position for the long term and end up with a hedge, it has to be something that you intend on doing. So making it part of a plan is really important. And like understanding that, hey, this 11 low zone, it could be worth battling to get exposure to the red yellow line so that we can get to the green dash one. And it's like this is how it works. Like I said, when we first form that red yellow line, until it's breaking, we cannot consider the red or this target. We cannot consider the target until the door is opened. We cannot start our journey to the target until the door is opened, and the door is the trend line. Until we've exited the door, we cannot leave the confinement area. You know, we're contained within that area until we exit the door, until we exit that barrier, which is the trend line, which could be the door to the room. The barrier that we have to break down in order to leave it. So that's the idea. And now, of course, we did we did break out to it, I suppose you could say, with great difficulty. Though there's a mixture of the two. It's not like it didn't come from a consolidation that was of multi lows, but here is the green dash line. And we can say it's undeniably because of the break of the red yellow, as we talked about hours ago, it seems. Uh, this is the case. This is how it's supposed to move. And ultimately it's very, very difficult to get exposure to this environment. You have to know what you're going for. You have to be comfortable with the fact that it is multiple lows in a consolidation prior to this reversal. And I'll just say it again that if you did keep your stop at the extreme, like I said before we even broke out in the first place, you haven't had to work at all. Just wait. And if you hedge, then it's a bonus, but it's not a necessity to hedge. It's a bonus. It's a luxury for those that understand how to do it. It's like it reminds me of the when I say that, we can chop axes with a tree or we can use a chainsaw, but if somebody hasn't been trained on how to use the chainsaw, it's no good to them. But to those that, and they might even think it's scary. They might even think it's like crazy. And then you talk to a lumberjack and you tell them it's scary, they'll laugh at you. They'll be like, I use this thing every day. What do you mean? If I didn't use it, I wouldn't be able to do my job. And to other people that have never seen it before, it's scary. So that's the way that humans are built. And I'm like, hedging is scary to people. Futures are scary to people. Go talk to Wall Street and tell them it's scary. I mean, like, really? No, 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 no. It was created by them to be used by them. Not to make things, easy, but because they want to be able to implement their strategies effectively because they intend to capture those results using those strategies. Like I say, consistency is intentional. It's not something that you get by being lucky many times over. You're not really consistent. That's not real consistency. But understanding what you're doing and doing it because you want to do it is consistency. And understanding that, you can continue to do it, not by repeating the same thing over and over again, called your strategy, but by having multiple strategies for multiple different environments and scenarios where you can find comfortability in whatever scenario the market's willing to throw at you. That's security. That's the only way I can sleep well at night. And if it means staying on all day, all night, understanding, then that's honestly what I've done. That is my life. So, until I understood, I focused on it every moment of my existence. And the more I didn't understand, the more curious I was. When people see a consolidation, it like weakens them and they want to leave because they don't understand. I'm like, no, man, I don't understand. I have to understand. I'm not leaving until I understand. That's that's the way it goes with me. Very, very interesting. And I assume this is what I'm up against. There's no way that Wall Street's not the same way. No way that they're not working till the end of the day. Because they understand what it takes to be consistent, what it takes to have a good relationship with the market, and to literally, when we have more change than we ever have before, spending less times recognizing those changes is not going to give you an advantage. It's going to be more time spent uh, understanding, seeing more changes will be able to prepare you for whatever changes there are going to be in the future. Because you've seen so many changes before, you'll be able to recognize them in the future. And yeah, it's interesting when it's difficult for so many people to do. And I mean, like, if you've done something that's really difficult and it's rewarded you, it's that much better. But a lot of people don't know what that's like, so they don't know to work for it. That's funny to me. Most people don't know what it's like, so they don't know to work for it. That's an interesting statement. Like, only if they could see what they were like at the top would they work for it. Interesting. But preconceived notions can be built about, like so many reasons. Like, everybody will tell you that, you can't do it or you'll never catch a falling knife. I was told so many things at the beginning of my learning journey when I believed them. And it was only when I was actively proving them wrong where I was like, wait a second, I actually did just catch a falling knife. 10 falling knives later that I caught, I was like, wait a second, how am I doing this? How is it possible? They told me that it was impossible to have consistency for a prolonged period of time. As I mentioned, every single day I'm doing a tally now, starting from the beginning of this year. And yesterday was freaking phenomenal. Today, not an incorrect thing that I've noticed. Every single thing has happened exactly the way that it should. It's not the most movement in the world, sure, but every single sequence, every single characteristic that I demanded has been fulfilled. Every single target that I've put on has been taken off. How many green dash lines have I taken off today? About a dozen, and I haven't even you know, essentially, we haven't even broken the ice yet. We got plenty of time left. Oh yeah, yep, yep, yeah. I'm gonna do it by the day, where every single day is profitable, and it's I fill the chat up with expectations, and every single one of those expectations is met. And literally, I changed the stream to the stream that nobody knows, or the best trading call that nobody knows about, literally. That's the case. And it's like when people wonder why I've only got a couple views, it's not because, it's because nobody knows about it, literally. Like, I dare you to watch the whole stream. That literally, that's the whole thing. Everybody's busy with the big groups, and I look at their streams and I dare them, like, go, like, challenge, like, look at what I'm doing. It's way better, hands down, 100%. Like, the results are clear, crisp. Everything is like laid out like a plan, like a journey, like a quest, and we literally fulfill every single one of those tallies. Every single one of the things that we're supposed to do, it does. And I'm like, I cannot remember the last day that it did not do this. So I'm like, you know, why it's not packed in here, I don't know. But it should be if I continue to like show everyone the tally every single day. And every single day I can make a little recap of all the amazing things that we did in that day. It'll kill me, but I'll do it just to show everyone. And I'm not happy about it having to do this either, but I'll do it. And when things are big, um, it's like, what the hell, humanity? Unnecessary, in my opinion. But I guess this is what they want me to do. But I thought about it, and like every single day that it's more difficult for me, I think about going to work for one of the most evil corporations in the world, making them money every single day. Because every single day that I come in and people don't want to learn and don't want to do things, I'm like, just kills me. I want to go take over one of the most powerful teams in the world because I can, and then just make it my team. That's becoming more and more of a an interest to me. Because that's one less ruthless, absolutely terrible institution on the table, and one way for me to get in there with my team, which I need. Because it's one thing to be able to do all of this, but I mean, I can take it to the whole other level. If humanity allows me to run a team, then I can do it very successfully. But I need people that are willing to be dedicated and determined and disciplined and patient, and I need loyalty as well. Like, I'm sick of the lack of loyalty in humanity. That's another thing I'm not going to deal with again. I will be on the most ruthless team in the world if that happens again. And I will literally work my ass off against humanity every single day if that's the case. So I'm putting it all open, and I'm trying my best to do what I can, but I'm just getting slapped in the face every single time by humanity. So I give nothing but amazing results. So it's kind of interesting. And I'll prove it. And that's what I'm gonna do. And I don't need like anybody to like. I'm literally just gonna freaking spend all my time doing this and showing everyone that this is the best place for them to be in, for the best moves. If you've literally been part of what we're doing here today, there's no better way to do it. Unless you'd rather catch all these lows and end up with the same trade from a higher point than where we were originally in the first place. You know, and this is all like, if you're doing it the right way, you should be on a side account doing this because you should already be long from before this level, from before this high. Like, it shouldn't be the case that people are long from up here. Remember, this day right here, this first day, this little red candle, right? If I type in the word cringe into the Discord, cringe, and I'll explain this every single day. Um, This is what I said about that particular day. That little red candle right there. The entire okay, here. The name of the game has been to hold, and it's been choppy for anyone that's tried to get exposure today. The entire process of the day leads people struggling to be in for the move to the high of day. Those that are late to the party are paying the price for not holding. Really clear. This is the daily chart. Buying appears high. I've said to hold for so long. Reap the benefit if you listened. If not, you're late. And it will be more difficult to maintain a long trade from the daily chart. It's cringe and I don't endorse it. If you're in from any time I've said to hold from, you're okay. But if you're trying now to be part of it, it's too late, and now patience is key. Literally from there. Okay? And that's where this is. And I pulled this up again cuz um I mentioned it the day that we pulled all the way back down here. I'm like, well, nobody should have been going long anyways from any of these days because all of it came back. And then we're surprised that we're at the low of that day and all of it came back again. And I mean, like, nobody should have been buying from up here. I said it was like every day from this point, it's been absolutely cringe to be buying, right? I'm like, if you're holding, it's absolutely fine. The name of the game has been what? To end every single day with a hedge from the high. If you've done that, then you're in the best position you could be in. From long from anywhere below here. If you're in from the best point, I made a video on that day. If you're in from there, that's absolutely amazing. But if you're not, you might be in from here. You know, you might be in from anywhere on this move here. If you're in from above a B point, it's like brutal because they're probably going to come back and get you. You know, so I don't really like that either. But if you're in from a point where it allows you to keep your stop at this low, let's say you even got in from here, you know, a couple days into the blast off, you managed to take some off at the high and hedged it, yeah, your stop can go at the extreme just like everyone else's. The only way that you can safely hold that is if you've got a hedge. And I mean, you know, you have to work for those, you have to make it your plan and actually work towards it in order to have that. Excuse this chart, it's not meant to be a long-term one. So that's the case with all of that. And it's like, you know, I have videos and like all kinds of different posts and everything indicating that I was saying to buy in here and here and here and here and here and to hold it as well and to, you know, hedge the highs and so many different occasions and just videos on like the continuations from points like this trying to, you know, break through these highs like that, literally breaking through these highs when we were at these lows trying to do the retest. The idea that we were going to get to these green dash lines on the top was all still there, and I never said to sell it. You know, the idea of a 5,000 point target, you know, happened at the beginning of the trade when we were going for the blue line from the underside up here and stuff like that. I'm just like, and it's all in the chat. You know, people missed it by not being here. Essentially, that's the key. And I'm not going to say it was easy because it's hard work to end up with the best trade, and like I accept that 100%. Sometimes it means, you know, waiting all day to get everyone else out of your trade. Like, wasn't it interesting, like before when I explained how, you know, we can have a really clear entry and I wrote clear. Let me do it again real quick. And then it comes all the way up to the high, right? And then it chops and then it came down about 78% of the way, right? And tries to come up and then comes down again and then finally goes up. This is what the schematic was like, right? Notice that that was the clear entry. That this was the chop at the high. That it came all the way back down, gave some hope multiple times. This could even be that hope right now. But we've managed to finally get the B points where, you know, like this one, it doesn't usually get the B point. Notice that after all this chop, it came down and it didn't get the B point and it didn't get the B point and didn't get the B point. Finally, it got the B point. Is it not true that this could be like our clear entry in the series of movements? You know, no, it's very much like a like that huge. I look forward to making yesterday into a video as well. But the video that I'm making right now is on the time that I said that there would be a big meltdown. I used the word meltdown, words meltdown. And it melted down to the point we're at right now. That's the irony of it. We will see in the video. I'll try and make it a quick one. But it's difficult to do that because I have like a longer one now, and I love all the things that I say in the longer one. Might make it a longer one and shorten it, and make two. Ideally, that would be the way to do it, because there's so much that that I would love to hear as well. If I'm like, hey, you want to learn from this environment? Well, like a 15-minute video explaining this entire environment and everything that I said about it, so you could see sped up, literally word for word as I'm saying these things, and watch them play out. And if you could see this of every single freaking day, and I can prove to you every single day, like I could make a video about every single day. It's just that's all my time. And I'm like, humanity, please don't make me do this, but this is what it's going to take, I guess. And I'm going to show you guys that you're missing out on every single day being positioned from the best freaking spot to the targets that hit every single time. So that's what I'm that's what I'm stating. You can be part of me proving this, and I think it'll be great. So I look forward to it. This could be wave 2 as well. Very curious about that. Hmm. Yeah, so this consolidation we have right now, I'm like, where have we seen this before? Sometimes I'm like, yeah, it's not a triangle. It's not necessarily like any kind of particular pattern, but it is encompassed within this rough shape right here. And I'm like, have we seen this rough shape anywhere else? And, could it have been part of some other bigger sequence? Not exactly. But I do notice that when we are outside of a zone like that, we have been making levels, or sorry, spikes that are kind of this big. Like I noticed that that's the case, that pretty much every time that we could be associated with this kind of consolidation, we have been interested in making spikes out of both sides. And this one does have a spike out of the bottom, may be interested in spiking out of the top. And I mean, this one here too, same kind of deal. I can't help but notice. As rudimentary as the analysis is, it is true that the confinement area within that small scribble did have spikes coming out of both sides. Any other time we could have, uh, that we're analyzing a consolidation area. Like this is a consolidation area too. I could circle it, and we could see that there are similarities to the circle even. But you know, we like to be confined within a rough area, and when we can see that that rough area has common tendencies to make particular spikes, well, we can start to look for those spikes, not exactly in the same way or at the same spot, but they might be. And it's like if we're looking for them, we're that much more prone to understanding the data and the reason for the moves, rather than just you know having it hit us in the face. But I think it's good to have an expectation for the move and to have it fulfill those expectations on a regular basis. It it highlights the fact that you have a good relationship with the market and you understand what it's going to do, and you want to build on that, and it motivates you to be there and to build on that relationship. So that's the way I feel about it, at least, which is a good way, um, for me. Could be for, well, but I would say that this consolidation is coming to an end, regardless. It does have a very triangular look to it, and it is undeniably coming to the peak of that triangle. And things can change at that time. We can see that it is sort of like a diamond look to it, like it's coming from an expansion and otherwise started to contract into a point that we're now leaving that confinement area. Like it's impossible for it to stay within the triangle for much longer than a minute. And now that it's left it, it may be interested in testing it from above, but we could expect it to maybe be like it was before the consolidation, when it ends the consolidation. It's an interesting idea. Because this one wasn't, it definitely wasn't. It didn't give us the consolidation immediately, but it did later. When it did end, it did produce that same kind of move, give or take, a little bit of movement. But roughly that the bulk of the play out, I think we could see that same kind of move inside of there. We saw that right here too. It was like the move that separated this consolidation, which was a larger consolidation, from what seemed like a smaller consolidation in a very strange way. But I like to look at the facts of the situation. It is true that this consolidation ended with this move before it started another one, right? And is it not true that this consolidation at the bottom ended before, with this move before it started another one? And I'm like, okay, then that's an interesting fact. It is true, and unless you can see otherwise, right? I'm like, well, I can even see that now looking at other consolidations in the past, like this major one up here, suspiciously particular that the move that it had before starting another consolidation seems to be very similar to the move that we have in between the current ones. And sorry, yeah, seems very similar. And it all seems to be roughly the same size as the consolidation that we had at the beginning, all contained within that red zone and green zone. The node that we had there in the morning is distorted, definitely distorted. But if we take a look at it, I just gotta blow my nose. It's hard to actually see the node of the morning now. Like I gotta go like this. Now you can see that that node was all of the volume that was contained within that area. Now you can see this area just kind of like we have like the same amount of volume down here. Holy smokes! Let me look at this here. When I pull this node down, like if I pull this entire consolidation down, and we take a look at the confines that it used while it was making this area. Oh, whoops. Take the whole thing on to double it. This area down here, I think just like that. So you know what? I will take the whole thing down. Just so you can see. I'll put it back But down here. Now if I cut that original consolidation off and we don't see it anymore, look at the volume down here. Suspicious that it's all contained within that same area. The same area that we used at the high. So I mean, like, you know what I see when I see that big consolidation that basically doubled down? You know, the whole thing is a big attempt at just doing that. Like, that's all it is. Everything is ending up exactly where it began. Um, One way to consolidate, I tell you. Common way to consolidate, probably the most common way to consolidate. But do you remember how I originally placed these inside of what was the green zone and red zone? Now they're sitting up here. You know, this range, all of the volume that we had in there, it matches what we have up here, and now it's one big happy party that you really can't differentiate the two areas anymore by just looking at the volume. It doesn't look like, it's not very clear. So what I do like to do is take this area, and I will double it, but I will um, change this to like blue, and I'll also make it darker because it's not the original. And I don't think we're going to spend much time in it, to be honest. I think we're getting ready to leave it, as a matter of fact. Oh, actually, you know what? This area right here, that's like our middle area. The VWAP has been met again. Of course, we did leave the range to the upside, similar to how we did get into the range. You know, this kind of movement here happened on the other side. And I mentioned this is how it did not work before. People will be assuming that this is how it's going to be again for them. But in fact, it was not like that. It was exactly the opposite. And it did go out of the top of the range. After showing everybody that the red yellow line would give them difficulty all day, the last thing they would expect is for it to break out the same way that it started. But was that not my expectation though? Is it not true that we've doubled this move now out of this range? We've taken the consolidation and put what we did on the bottom out of the top. And now we've returned not only to but through the bottom of the green. And the 61% retracement, well, it's in trouble. Now you want to know what's funny? Is that still the 61% retracement? This was not a new low, so it didn't change the fact this is still 61. You can see that 61% right there. No, that's right here. That's what that's trying to tell us. I know it says 61% retracement there. It's talking about that line right there, just to be clear. Now I'm going to go ahead and take all these other lines off because they do provide clutter. And I'm like, what I really want to see is the horizontal levels. Like I have a lot of respect for them. I know I just added in these here. Like I said, I don't even think it's going to use them anymore. Let's take them off. If it goes down there, I'll put them back. At the end of the day, this is how the chart was on the origin. Now, the bulk of the volume is contained within this area here. That, that. I'll make it that color too. Just because we know then on the other sides of those colors, or on sorry, on the other side of this color is a green zone and red zone. I don't want to put one there though because of the the amount of information. I don't want to somebody that hasn't been following along all day, they may struggle to comprehend why there's so much information. But I'm like, I get down to it and I'm like, there's been so much time to comprehend all of this information. It's very much not, you know, difficult to comprehend one more thing. And I very much can't help but think we can either accept it or neglect it. Did it not create what it was supposed to do out of the other side? I'm like, well, yet again, it was the right thing. So I'm like, it's remarkable. And it's not because it's something that it did, but it's actually the opposite. It's not assuming that the same thing over and over again is going to give us the same result, but exactly the opposite. And of course, there will be a time in the future where we will get a consolidation like this and it will go up. This one will go down and it will do it again. It's not because of this series of movements that I expected it to do that, but because of the environment. And this entire sequence like this can happen again in the future. Um, doesn't necessarily have to work like this. But remember, I said this could be wave 2 before it started pushing out, and that's exactly what it is, wave 2. Because now we have wave 3. 1, 2, 3. The next wave could be similar to wave 2 and confined within an area very similar to what we see here. Don't be surprised if it pulls back just like that. Honestly, I like the idea of it using the VWAP from above, but that could be maybe, it could be a little bit from now. We'll see. So of course, now we did hit the 61. I do believe we are interested in breaking it ultimately. So beware of further wicks and spikes on top of the 61. We can see that now it is the case that we've pulled back the same amount as the previous pullback, and we are on top of the green zone. I'm going to remove the white lines just so we have some clarity. And I'm like, is this the amount of spikage that we do when we spike? It's awfully similar to how much we spiked when we spiked before. Every time there was ever a spike. Allowing for it to test the VWAP from above is very important. Start to become of interest. It is the case that this move right here happened again. But yeah, anybody that kept their stop at the extreme didn't have to play the game because, I understand the way that the game is played, and, it's exactly like the clear entry at the beginning of the day. Anybody that had the integrity to hold it got to watch the show. Anybody that tried to fight for the lows essentially could have held a stop at the extreme. That was the strategy from the trade's beginning, and there's no better way to do it, in my opinion. On the low or on the high? Oh, yeah, on the high. Yeah, right there. That's interesting. I think we're going to attack it again, though. The B point is a weird one because it's already been played out since the 141, and I wonder if it's going to be interested in hitting it. Because what it reminds me of, I know it's not exactly this way, but it's like we've done this, and it's like that's a W, and I'm like, well, that B point, like in this series of movements, this gets left alone And this can be as well. But in the series of movements that we've had lately, we have been known to make incredibly large retracements. But what would be the need to make an incredibly large retracement on this one? Becomes the next question. Because that's what it would be if it was to get this B point. It would be a pretty large retracement. Hold on a second. I remember the 261s have had 61 B points a lot. Like, let's analyze this and see. Is it a 61% retracement to come down off of this level? Oh shit, it's a 61. That's really interesting. Why is it so precise? Huh. You know what? Yeah, I don't know about that one. That's an interesting one. I think that this level gets marked because I don't think we're interested in it now, but it's going to pay the price and come back to it later, and nobody will know why this level gets so much attention. And it's because it's forgotten about now. We're going to go ahead and mark that as the and why it's forgotten is because I anticipate the lack of attention that it will get now. I mean, it is a B point. We're going to mark the B point on top of it too. It's like that. That's an interesting level. It's got two lines on there, a gold one and a green one. We can't miss that. Hey. Mhm. Um, let me think here. Let me look here. Yeah, 3K profit target. Yeah, 3K profit target. Right on. Mhm. I'm curious if this is a way of them showing us that the characteristic of the 241 and 261 leading back to the 61, might change because I think it's acting differently. I think it's trying to change. Now, of course, it did lead back to the VWAP. This is a VWAP that I think is relatively important. Like, couldn't you say that it was something that held us back for a prolonged period of time? Now to be standing on it, interesting. It's quite the change, one could say, I guess. Now, one other change that we've had here is we've managed to get farther in than we ever have before. Now, does it mean that we pull back as much and do the same thing? Well, I'll tell you one thing. Oh my goodness, I actually just noticed one thing. Do you know there's a pattern back in the day that I would talk about where it's like two humps and a pump? I would call it, ironically, because it's memorable. I mean, you love it or hate it, you're gonna remember it, and it's like that, right? And it is here very much like this. Very strange. Indeed. It is a five-wave move. Oh my goodness, sorry. I'm trying to drag this line over here to show that it's that. Oh my goodness. Suppose I put it here. And let me just type in the chat. Okay, here we go, yeah. And it would do things like this in the past. Kind of similar, but I know that environment. There was a lot of that, so I'm gonna go find some more. Oh yeah, yeah, yeah. Yeah, like this. And it came out of environments that were like that. It basically had these, you can see it here. I don't think I was really drawing it in so much there, but I was like, damn, have we ever seen this a lot? I'm like, what is that? I'm like, that's right there. Clear as day. And I'm like, yeah, sure, it was doing that and everything, but do you not see it do this? And I'm like, well, yeah, that is the case. It did do that. And you can see it's like I was saying things like this, we're done with that and we're interested in doing this. And it's funny because we would come from an environment where if you put a triangle on the top, you would expect one out of the bottom, and it didn't do that anymore. It was like, okay, enough of that. We're doing this now. And that's what it did. Interesting. Now I guess we're back to that. So I'm like, well, let's look at more of what we did when we were in those environments and see if we can find any further similarities. Yeah, because we were still doing stuff like this. It's great. Got a lot of that going on today. And this is like a drastic version. I'm like, wouldn't you say, like, coming into this environment here, is very similar to this. And I mean, you come up, 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 and then you start that consolidation, and it goes higher. Look what it did to those people today. Could you expect it to do that always? No. This one was even higher. Still worked out. Environment is huge to being able to depict the change in the environment. You want to be able to understand the way that things are and the way that things respond. Just because it makes a channel doesn't mean it's always going to have the same result. And then I can take lines like this and take this area. We're contained within that same environment. We paused for that same time. But isn't it funny that this confinement area, which was identified very easily with this bar, happened again here and happened again here. Suspiciously particular, no? Not always the same size, but let's take the size into consideration. Let's look at this one. What did we do here? Well, we made something that was roughly this size. Was that double? Looks like it was double to me. I'm like, okay, fair play, it was double. Now what about this one? Are we done? Well, we could be, because we've went down for as much as wave 2. We've went sideways for as much as wave 2. Could this be wave 4? And what happens to wave 5? Does it even send us down, or do we just go higher? Because I mean, everybody that's seen 5-wave moves in these environments assumes that the 5th wave has great reversal potential. I think that too is on the table for change. Yeah, now I'm seeing that everywhere, where we got that like first, second, and then rush. Like all of the pop gets withdrawn in like a weird method of being able to do it again. Yeah, market's way of showing us that 5 waves has great potential of reversal to the 61 too. Like that's one way that it wants to show us that. Like, oh, suspiciously particular. And they were going for the 61 and it shot past it a bit there, whatever. That's fine. Now, this line attracts me, as nothing changes until it breaks. One thing that's interesting about it is, God forbid it's helping our relationship with the VWAP, because without that trend, we may not be able to stay at the VWAP for much longer. And, this line and these distances, we've already subconsciously seen it before. Like, it's so strange to me to see the distance between this high and this high being used again here. The confinement area below that second circle is remarkably the same. Why on earth would anybody go for that? Do you think there's a whole bandwagon of people that are just literally trying to make this happen? Or is there a better chance that 95% of the people are absolutely oblivious to it, factually making this pullback and doing that exact same movement that it did here a moment ago? And I'm like, well, it's very, very interesting to see that that's the case, and that there is so many particulars that can go unnoticed completely. If people aren't looking for them, like for instance, the distance between the red zone and the blue line, and how that was double what we were seeing here, but it was all the same distance, all the same angle, all the same size, and so is this one. Except this one took it to the next level and confined everything within the same kind of triangular formation that we had here. Remarkably similar. Now, what is remarkably similar about that is the support angle. The more that I look at these things, the more things that I find, you know? And I'm like, well, what about putting that angle on the high and then doubling it? And that's only for the break of this line that we could expect it to do that. Deja vu. Hmm. This line is definitely very similar to the line that we had at the bottom. I'm curious about whether or not this falling wedge, because it's so high, can have the same spike that we saw out of the bottom. It would do a test of the POC, which is the heaviest volume node inside of this entire environment. Um, the Forgotten 61 is something to consider as well. I'm curious to see if they're going to be able to get it, because it is something that's not tested, and I think it stands a good chance at actually being forgotten about. They could try and get close to it, but ultimately forgetting about it altogether could be on the table, and that kind of would be new. So I'm looking to see if that will be a new thing, because it's something that's happened so many times. I would suspect people to have caught on, but I guess not. That is one thing that's interesting. Because I see other things happen so many times, right? And then they change. And I'm like, well, I start to become used to the fact that if we see something so many times, we're subject to being closer to it changing than that being the same way, and making it easy for everyone that's a part of the process. It's more likely to change and take their money if they think it's going to be the same way. So I'm like, all right, well, assuming that it's going to be changing is clearly throwing everyone off. And what's funny is for decades it would provide a pattern and do that same pattern again and use that as the pattern to get to where it was going. Now with all these people in the way, it seems to treat them a little different. Now I can see that this confinement area that we have here, like this is the confinement area that we were using down here. That's the idea. Okay. And when we did it down there, we didn't do a spike out of the bottom. But that's precisely why I was interested in one. Like, it's like literally a complete contrarian view of the market, and I mean, sometimes it's appropriate. Like, people love to brand people. You might call me a contrarian trader, but I'm like, that's just right for this environment. And I mean, like, that's just the way to play this environment. In the future, if it's everybody jumps on the same bandwagon and we all make easy symmetrical triangles, and it just goes higher and then higher and then higher, I mean, like it did in the 40s and 50s and 60s and so on. I mean, like, that'll be easy, and we'll switch to an environment, to a trading style that matches that environment. But in this environment, we have to expect that it will be full of traps for people that are using the Google cheat sheet. That's like I've been saying since the beginning of the year. Uh, it's like the composite man basically typed in on Google the trading cheat sheet and was like, throwing a dart at them, being like, which one do we make fail today? Because these are the list of patterns that are most likely to fail in 2023 and 2024, ironically, contrary to popular belief, because they're already hanging on people's walls and they're not going to take them down, even if they're wrong 500 times in front of them, because they're human. So it's interesting, and you can count on it. And because somebody told them that's the way the pattern is, they will believe it and they won't fight that idea. That's the way people are programmed. Not me, though. I'm skeptical, very skeptical. And I challenge everything that is brought to me. And I change very frequently. So if you think that I do things a certain way, it's not going to be the way. If the environment changes, you can expect me to change with the environment. And oftentimes I can anticipate things that I've never seen before. Like, have I seen a falling wedge at the bottom and specifically spike out of the bottom like this distance before? I'm like, maybe, but like, am I referring to a specific time? No, no. It's just this is right for what's going on in this environment. So this is the expectation. And therefore, we expect the results of those expectations to formulate. And the distance that we did below the view app is suspiciously the distance that we've made particularly a spike. And I noticed that that's the distance that we made on top of the view app as well. It's also the distance that we made on top of that distance. So interesting. The distance that we also made at the bottom, below, like look, that circle begins on the green zone, right? And then this one begins below the green zone, right? What's the distance it made on the bottom? Is it fair to say this is pretty much the same size spike? And I'm like, yep, 100%. And suspicious to say that this is the distance that we made on our consolidation, give or take a small distance. It's also the same distance that we made on this consolidation. The size of the node in these consolidations will be the size of this circle, which is the size of the spikes that we've had. And ironically, the size of the spikes that we were using uh, early morning. Every spike that we made on top of that green zone, not everyone, but the majority of them seem to fit with that distance. Did it make this distance? Made more. Oh, it made this distance here. Okay, so when I can see that it has this distance, which is a normal distance, and all that remains out of the other side is a spike, could we make one out of the bottom? Becomes the next interesting point, and then that would get us to the B point. It's a very big maybe that I wouldn't ever decide to make an entry on right in the middle, because this is ironically I think the worst spot to trade from. It's not the worst spot to trade to, it's the worst spot to trade from, because it has never been the best price and it never will be the best price. There will always be a better price than it. If it decides to go up 100 points from here or down 100 points from here, this isn't going to be the spot people are like, "Oh my god, I can't believe you got here." Like, no. It's true. Yeah, yeah, yeah. That's an interest. That is an interesting one though. I think there's some strange things going on here. Like when I put the fibs on there, I noticed that the 141 took it back to the B point, and now we've come back to the 141, and it's got like this written all over it to me where it goes like that, and I'm like, sometimes it just doesn't stop doing that, and I'm like, well, that's when it gets brutal because it's like, well, I already played out from the 141 and from here and from here and from here, that like it actually thinks that it's covered the bases when it really hasn't. And I'm like, I've seen it do that before, and it's rough. 'Cause I'm like, what happened to these B points down here? Like, are we in the business of doing this to the B points now? Because like, what B point, what fib did we reverse off of there? Like, we went way past all of the fibs in the spectrum and never returned back to the B point. So I mean, that's how this trend started, and I'm like, that's like, oh wow, where did that come from? It's like, God forbid we don't get this one either. I'm like, well, that's this trend we're talking about. It wasn't interested in hitting any B point really from any respectable fib, and like look at the like veracity, I guess you could say, of it. It's interesting, different, and undeniably, the consolidation in the middle does have very much like two spikes on either side. That could be considered done by this point. So that's like this S wave coming to an end in a weird way. So, oh yeah, okay. Mhm. Oh yeah, that's really interesting. Yeah, because the thing is, I was looking at it doing this in here, except with the spike out of the bottom, um, and it did that. But this is also like that. Like the one thing that I find intriguing about it all is that they have roughly the same amount of time before finishing, and they all have this move, like here, like that move there, and that move there. Like at the beginning and end of the consolidation, they all have this move here. Seems to be that move starts it and ends it. Like like this area here is one zone, and so is this area, but it begins and ends with that particular kind of move, and it's a spike. Like what makes me look at it like that is the fact that in these two here, we have a very strong spike down and a very strong spike up, and it's just so clear that they're, the beginning and end of that environment. And when I see that, and I can see what they have on either side, it's like that movement as well, which is kind of strange. Um, this is probably the most controversial time, I would say, throughout the day, where it has met the middle more times than any other consolidation. Like we've come to the middle of this thing more than we've come to the middle of this one, I would say. This is honestly strange that the POC is still up there. I would think it would have been down here. It's very close. I mean, if we chopped here for 5 minutes, it would steal the POC, I think. But yeah, if that 61 doesn't get hit, it wouldn't surprise me though. That's the one weird thing about this environment, where it's not because I've seen it happen before, but it's an anticipation. Like that, I anticipate that it might be forgotten. And it doesn't mean you're okay to drag your stop above it or nothing, but in the event that you're targeting it is where that could become very useful. Where like any obstruction that we have that's kind of close to it, like the POC here, we don't be surprised if it doesn't, get all the way through it. If it does, it's not that big of a deal, but man, is it ever interesting if it doesn't get to that 61, because that's like where did that come from? The whole day started with us getting back to the 61% retracement, and it was like, hey everybody, look at how good I am at coming all the way back up to the 61% retracement, and then what? Why we have forgotten 61? Can't get to the 61 anymore. What happened? You could say that's kind of strange. And you want to know what's weird about it too? Is that this is the 61 still, and that since we've made that 61, this is a 61 after it. So it's a 61 to a 61, and it's failing to get to the second 61, which is weird. I mean, we don't usually see that. Usually it's capable of getting to the 61. Clearly in the morning it showed everyone it liked it. Now anybody that's trying to get it is jumping through hoops. I mean, it showed everyone so clearly how easy it was to get it. Now, why so difficult, right? And by this point, it's like, who would it affect negatively? The robots, the algorithmic traders, the people that need it to get to the B point because that's where their order is. And it doesn't matter what goes wrong with it because they're not there. It's the robot trading it, It's like, it's not going to recognize if it doesn't get all the way there. It's set to profit at the B point and that's it. And if all of that doesn't get filled for whatever reason, that would be intriguing. Looks like it's going to though. We're just about there. Looks like we're there. So that B point is cleared. We've left other B points up top. We can go ahead and move them, and smaller ones as well. can't help but remember the last time we made a 61% retracement, it specifically spiked this much below it before returning not only back to it, but through it. Like if you look at this 61 here, see, we did a 61 of this movement and it spiked beneath it that much. Now, I'll tell you one thing, there was a range there to hold it, whereas there's not here. Oh, and of course, this B point down here can be marked with a thin B point because it is true that there's an untested B point in there. Anybody that was part of the continuation from the consolidation is put into a difficult position. The show continues, however, those that kept their stops at the extreme remain safe this far. Ultimately, that red-yellow line at the high, it's not a line many people will have because it's never touched the price more than once. It's not an actual trend line, as a matter of fact. It's going to be interesting to see it get a response. I find it quite intriguing that we managed to make the same spike past the controversial 61, the one that's supposed to be holding. Now you want to know what I think we're going to do? Is we're going to take that spike that we've been making out of side of the 61s and make it through this one. That's what it wants to do. It wants to make it through this one because it's never done it before. And you know what it's done every other 61? Is it's made this spike through it. The only one that it hasn't is this one on the high. That will change. And I don't think it's just going to be that spike past it either, but initially that's the spike that we're looking for. And when it does pass this, yeah. Well, honestly, like I'll show you the main registering factor for me. Like this right here. Like I'll take everything off this chart, make it very, very clear. We take a fib from the low to the high here. We notice that this is the 61, right? And it treated it like absolute crap. But we know that this is the average size of our spike that we've been getting today. Like it's literally the spike that we had multiple times throughout the day. Like that is our average size spike. We saw that was through the 61, right? Now we take that same fib from this to this. And it's different on this chart. But effectively we made this the same spike. I'm curious to see why it's different on this one. Not sure. Regardless, the spike was the same size out of the bottom of the POC, and that spike was the spike that was left on the underside of the trend break that matter. Like this one is the trend break that mattered, and this is the trend break that mattered before, and that's what spikeage that we had below it. And it's intriguing to me to see that it wasn't just this; it doubled, and it's like, okay, is that what we're doing now? That it had the same impact. Now, it was difficult for the people that were part of the process from that point on, but just remember, this was the 11 low zone to the people that had the best price from here. And that's where it began. And I think that, this entire movement could be like the two humps towards our pump at the end of the day. Beware of that. Like I was explaining over here, we could literally be formulating these two giant pushes just like the schematic depicts over here, except hold on, let me just control. We have this so far. what could be the impact of retaining exposure to the break of this line? Could it mean that we have exposure to the potential that it has on the other side of those two humps? That's the interesting part. Is it's true that there is a lot of value in being exposed to something that has been uh, prone to causing a breakout. Now, I'll tell you one thing. When we do this, this is like an area that's a consolidation. When we pop out, this movement can come back, and we can ride upwards on this kind of movement again and again. And it's really uncomfortable for a lot of people because they love to be in late. So what happens if they're not late, then they are okay, but man, anybody that gets in remotely close to the high of the consolidation or close to the breakout at all gets wiped out, and it's like that's going to be what I expect is going to continue to happen until we get so high that people stop trying to be part of it because they don't want to be caught buying high. They're just too uncomfortable. And that's when we get into an environment like this on the daily where people try to fight against it and it just inches higher every single day. Like I think we're in an environment like this right now where we have really sharp drops and they're going to get bought back up, every single one of them. And people will wonder, when this used to be all-time high, how it finds the ability to go up so strong, so much, so high after so much consolidation. Look at how much the momentum will be down. Like it'll go down for weeks and then still go up. And that will happen. Or else all of Wall Street will not make money. Not unless they're hedging. But those assets won't grow and they don't make any better money than growing those assets. They can hedge them all they want, but it's not good for the economy, I don't think. Better things just go up. And if they're going up on authentic results and progress, then that's great. And it's like now we have multiple different lines from before that I can take off just to avoid the clutter because I know that can be a bit much, but we can take these off. I like to leave that on for reference. The attention is here, and to be honest, this new trend line combination with this one. I do think that what we're creating right now is we're working on the angle of the uptrend. So that it's not incredibly steep. And I can see, you remember when we had a spike in here and a spike here, and it was like we had a consolidation in the middle. Well, I cannot help but notice that this consolidation in the middle is separated by that same kind of spike on both sides. Like the idea that we have this kind of consolidation area that has a spike and has a spike, this is a process that has been fulfilled multiple times throughout the day. where effectively we have the movements like this separated by a consolidation. Yeah, the very short term there. Okay. Intriguing. So what we've basically done here is a spike and a spring. The spring has come down to this 61% retracement that we've been looking at. That's what's going on right there. That's the 61. And I'm like, well, does that not look kind of similar to what it tried to do on this side of the spectrum? I know it wasn't a 61 on the top and bottom, but throughout the time that it spent on top of that VWAP, that's what it chose to do. And the time that it spent below it, this is what it seems to choose to do also. I mean, like, that's just one way of it being able to do this. I mean, like, how many times have we seen that? It just can't get enough of that. It's hard for it not to do that, to be honest. Not a day goes by where it hasn't done that. Some shape, way, or form. Yeah, I'm curious. Like I said, this area, it's not good to trade to, or sorry, from. Not a good area for entry necessarily. It's not like that won't change. We'll leave this area, and I think we're closer to leaving this area than gonna be closer to the end than the beginning. In fact, the two yellow lines on there can be made purple in order to show that this is a triangle that effectively ends at the tip. When it does end, that reminds me of one of the first triangles we saw in the day. Isn't it strange that this triangle is kind of like uneven? So is this one. Symmetrical? Not at all. This one? Not at all. Like this one's looking like that, really. Which is where I get this kind of longer bottom triangle. What happened inside of this one? Okay, it was a 61. With absolute precision, it came down to a 61. Okay, okay, okay. What did it do on the short term? Did it come back up to a 61? Geez, it did. So, inside of this movement right here, it actually went from a 61 to a 61 to a 61, literally, and then it ended. And that was the triangle. But basically, this pullback right here came to a 61. And effectively, when it pulled back up, this high was a 61 also. And I'm like, what about the 61 here? What is it at? Get to it. In fact, I know we will get to it. But That's the green zone. I think we'll get there for other reasons. 61 just adds to the fact that it's going to get there. But I'll see. The end of the triangle has to happen first, that's for sure. And it looks like it's going to happen soon. Allowing for the triangle to retest is something we've had to do and will have to do for the future. If it doesn't retest, that's dandy. But I mean, look at it retest. It needs to retest. Like, I'm not gonna complain if it just does, if it just gets to the target without retesting, but man, if it ever gets to the target without retesting, don't think that it can't retest. It can come all the way back. All the more reason to take profit at the target if it hasn't managed to retest things properly, on its journey. Then that means its longevity is at risk. Clearing all of the retests is a good thing. Allowing for it to come back because it's supposed to come back is a good thing. It's like there's no better way to end up with the best price that's safer and lasting for longer than the low of day than trying to fight for all of these lows like we went over a million times. And I mean, if you caught these lows, I mean, you know what it's like. Do you want to fight for this? I mean, it's not even anywhere close to as good of a price as what you just fought for. Why would you give it up to fight for this? We know that this is toxic, right? This kind of environment. Anybody that tries to get this nice juicy run, hopefully they didn't lose all their money trying to catch it, right? Well, they didn't have to if they kept their stop at the extreme, and that was what the name of the game was. Now, of course, if anybody obstructed its ability to come back to the tip of the triangle, well, that wasn't very smart, right? We have to make sure that it's, never going to be something that we do, and you don't have to be doing it to learn, from the fact that, hey, if anybody did try to drag the stop above the triangle, they ultimately learned that the hard way, and it was something we never have to learn the hard way because we can see the results of what happened to those people right now. And I mean, how many times is that lesson dished out on the market every day? I mean, it's like, why don't people, learn from it? You wonder. It's interesting, but it's a series of different people falling for the same mistakes over and over again. I think that's what the market is. And we see that all the time. Hey, isn't it true that we took this little area, we have like a spike on the top and the bottom, very, very similar to what we've done before. And I'm like, well, deja vu with this here. It's just a really bad job at what it's just done. And I'll tell you one thing. It's spiked out the top of the triangle. It could match that spike out the bottom. And what that would do would readjust our angle. Not that it has to do it, but I certainly think it should be allowed. If it readjusted the angle that much more, like think about it, the steepness brings weakness. Because if you have a steep trend, like if we're like, oh, all the way up here, it's like, oh, we can't even go sideways for half an hour. We're gonna run into that steep trend. But if we have a trend that's like like this, I mean, and we ended up doing some sort of bullish pattern. Like if we went sideways, up, and then down, and then made that the low and actually got some distance, I'm like, hey, look at how much time we could have with that trend. We could have all of this time here to do all kinds of like crazy, like, hey, I'm a head and shoulders, try and catch me down, psych, going up. And it's like that's the kind of room that we want to be able to buy here. We don't really have that kind of room right now, and they know this, so they're gonna make it. They're gonna make that room, and I think that making it on a bullish pattern is one way to do it. Um, Making it even is normal. Making it even wouldn't get to the B point all the way, and I'm like, what else could prevent us from getting to the B point all the way? What about this gap right here? Could that cause a problem? What about the red zone? I mean, it seems like such a small area. Wow. Jeez. Is that strange or is that strange? I haven't looked at this distance for hours, and then all of a sudden I drag it over and we're making this distance. And like that was the distance that we made when we were breaking out between consolidations before. Now it is the distance of the entire consolidation, which is really interesting because what we've managed to do is create a move like this and then a consolidation and another move on top of it, right? And then in order to make the triangle, we've taken that move and turned it into a triangle, which is very similar to what we were going over in the morning, where we can have a consolidation like this and it has one in the middle, like the high, the low, and the middle. This is a different way to do that, except we have like this center point in there. I think we're doing something very similar to that, where we have this divider and the advancement on the beginning and the advancement on the end became the entire middle. That's basically what happened. And I'm like, well, it's a fact that, outside of this consolidation, we move that much. And before that consolidation, we moved that much. On the beginning side of that move, we were in a different consolidation. It ended with that move. And when that move ended, a consolidation began. When that consolidation ended, that move began. Now, that move is the consolidation. And I'm like, well, it's an interesting way that they've set that up to make sure that that is the factual way that that is. And I mean, like, what's weird is if you were tasked with just taking this line and drawing the market in, trying to make that happen, trying to make everything line up would be difficult if you were tasked with the ability to do that. So I'm like, having it be the work of the public to make it so precise, so unlikely, when I can see that no strategy in the public has anything to do with that precision. So, I mean, who does then? The composite man? I'm not sure. But somebody must. Because I don't think it's a work of random nature. Now, this next minute is an interesting one because it is a fact that we will not be able to be inside of that triangle anymore. We can be in another one. A lot of people will be like, oh, well, what about this triangle? Is it not a triangle? I mean, like, well, it's true. If you just sat it down at the computer right now, would you ever draw this line? Would you ever draw the triangle like this? You just sat down at the computer? Nope. Most people would draw it like that. And it is true that it is a triangle like that too, but it's a different triangle. That's where I come in with the difference. Hmm. Yep, yep. The time of day is an important one anyways, I think. And like that report, it's like a reason for people to be like, "Oh, the move at 2 o'clock. What happened? Let's check. Oh, FOMC meeting. That's why." And people are literally that simple. They will think that, and so my chest just turns when I think about it. But you know what's very weird is it's human nature to be like that. It's not their fault. Conformity killed the cat though in trading. Because if conformity was the key, then everybody would be rich. And all of the big clumps of people doing the same thing would have benefits on a regular basis. This is a huge move for that time. We snap down to the B point and we're interested in breaking the red yellow line. We want to see that thing break and get to the green dash line ultimately. Heavy volatility. The green zone's under a lot of pressure to the upside. This is the work of getting rid of that triangle. The last minute that we can't be in that triangle as well. No, it's not abnormal for it to make the event the pinnacle of the triangle. Things have been made even on both sides of that triangle after all. Something that should be allowed. You want to know what I find ironic is that they missed the B point. Why? Mm-hmm. We want to see that red yellow line break. Yeah, they're very. Hmm? We still have plenty of time at this node as well. In the event that it wants to chop here, it can. Again, it missed the B point. Things have been made even. Essentially, anybody that's not still holding from the lows or keeping their stops at the extreme is like literally been overlapped. And it's going to be funny to see that everything that everybody fought for and everything that everybody thought was difficult was ultimately the way to go. And you know what I find interesting as well is that on the report, where they decided to pop it up to was particularly the red yellow line, which I mentioned was not a level that anybody else would usually have because it never touched the price. It's an imaginary level that nobody would draw in. You could expect no novices to have that level, literally, because it's not a trend line that's ever been formed until now, till they made it. So, kind of interesting. Now they'll have it. The V point finally hit. New ones have been formed. The ones that are under here as well, really, really small. But V points nonetheless. So the blue line isn't from today. Returning back to it isn't exactly on the table like a normal blue line, but it will have to return back to it for other reasons, but not just the same ones as a normal blue line. In the morning, this was the B point that was the larger one. This one is kind of a small one, doesn't really matter as much, but they're not necessarily destined to hit. We can get close, but the report volatility is necessarily, I would say, kind of reaching its climax. But we return back to the blue line for other reasons, like I said. The first B point managing to get hit. Stepping on top of the blue line could be a direct ticket to the break of the red yellow. We have to understand that these moves are trying to clean people out so that we can carry on through the highs. Not about it's not about trying to sell off so that people think that the um, we're trying to make people think that this event is bearish. They're all foolish for thinking that, in my opinion. hmm The tip of the triangle. Don't be surprised if we double the move on the bottom of the triangle on the top like we have every other move since we left the triangle. Don't be surprised if we take the consolidation and we make a spike on both sides of it of equal size. And when we get to that other side of the consolidation, part of me thinks that it doesn't actually have to come back to this point like it usually would. Now, just like the previous blue line, I think breaking this one and stepping on top of it is pretty normal. We're going to go ahead and turn this one up. It's a little bit more important than it leads to believe. So now we do the process of stepping on top of the blue line. This won't be the way that every blue line works, and it's likely to change the way that it actually responds to blue lines in the near future. So understanding this is the way that it's always going to be is not a good way. But it's the good way to understand this way. This time, it is that way. It's the way that we step on top of the blue line, and it's the way that we are while we're underneath this red yellow line. This red yellow line, I made this red yellow line before it responded to it. A lot of people just have the liberty of being able to draw it in now. I understood its importance before it even existed. Just remember that. And remember who made it. The people that started the report, that created the volatility, they respected this. Not the people before or anything, but the people that make the market move like this suspiciously made that trend line exist so they can break it. Watch. And it's not just going to go to the green dash line. But you want to know what that would do? It would be even. That's the irony. The irony is that it would be even. Give or take a little bit. Pretty freaking even though, both sides. Like I guess you could say from the moment that it left that triangle to the moment that it met that low, if it is to make it on the other side, it would it would have been even. Now, because of the difference that we have in the decline of the whoops, in the decline of the where on earth that could be found somewhere else, but it huh, yeah, no. The green line is part of the future as far as I can see. Now, stepping on top of the blue line, now remember, I didn't mention that. Stepping on top of the blue line, it's not necessarily the cleanest step in the world, but look at every test we've ever had of this. Are we in the business of making things clean on it? Show me a clean test of that line. We don't even have one. Doesn't making things even on both sides of that line though is what it's good for. And that's what we're doing right now. Making things even. Because it's a line of symmetry, really, if you think about it. Everything that we've done on the top of this line is what we like to do when we go below this line. Why? And what do you think this move is any different? I don't think so. This move wasn't. Sounds very similar. I mean, it goes on to make how many S waves? Like, how many times has it done this, where it goes from one side to the next and then back? How many times has it decided to do this little kind of move from both sides? It loves doing it. I mean, it just did it here again. This movement right here was matched on the other side. Suspiciously particular. Why? Because this is what it does when it's associated with that line, and that's fine. I still consider it stepping on top of the upper blue one. The bottom blue one is suspiciously particularly close to the 61. And I'm like, okay, is it allowed to get to a 61? What is the what is the benefit from not allowing it to get to the 61? And obviously we can make that spike beneath it. We've made this spike beneath the 61 countless times today. If it wants to do it, it should be allowed. Now you want to know what's funny? Is this spike doesn't always mean the 78 because it's not always this big of a move, but it's always this big of a spike. That's what's funny. Maybe until now. But I'm just like, well, allowing it to happen and needing it to happen, two different things. I say allow for it to happen because it means that you don't drag your stop within its path of it happening, which means no stops are safe above the 78. And effectively, if you traded up towards to get the blue line in the first place, it shouldn't, I don't think you would be buying from here, right? So, and another thing that I find suspiciously particular is look at the volume. Who's involved with this report? Is it the American public? Because where are they at the best price? Again, not there. People were sellers there. Sellers to who? Like you see that volume in there? Like if I go ahead and just turn this up here, you see that that's the selling pressure on the outside of the volume profile. They're all sellers. To who? The dark pools? It's because they take your shares and move it onto their secret exchange that you can't see and it doesn't show as volume? Or was there nobody buying there? Is this just bullshit? This candle? I'm like, no, man, I'm not naive. They're moving it onto another exchange that you cannot see, and it should be made illegal, except nobody knows that it's happening, so it's never going to be made illegal. And that's the problem. But it is true. We have a new trend here. And if you're interested in that, you can look a book up called Dark Pools and read about them. But isn't it crazy that it did the spike? Like if I control Z enough, I think it'll pop in. Oh no, it won't. Tragic. Oh yeah, it will. I was doing the volume profile. Where is it? Where is it? Where is it? Interesting. Yeah. No, it literally was this distance past the 61. That was my cue. Mm-hmm. To what fib though? Like did like one of these little lows in here? Little tiny ones? Okay, okay. Yeah. And what was to say that that couldn't have been a 261? Oh, okay, okay. Okay, fair play, fair play. I just think right now the major cue is the spike beneath the 61. I think that's like the holy grail for the major reversals that we've been seeing off of the 61s. And like I said before, it's like just because we make a 61, that 61 could be to a move this big and it still makes this spike beneath it. Or it could be to a 61 of a move that's this big and it still decides to make remarkably this spike beneath the 61. And until it makes that spike, and it could be slightly around the 61, but that spike is something that's associated with any 61 that does work. And I mean, what's weird about it is this was the first one. And it not only hit the 61, but it came down and down again after it to really hide the fact that it really had any kind of interest in being at the 61 at all. But when I see that, what does it show? That every single bit of volume that ever existed beneath the 61 was bought back up as quickly as it was sold off, and people think that's bearish. I mean, like they got another thing coming. Because after all, it's true that yeah, that level broke multiple times just so that it could be bought back up. And like, what's funny about that is if I draw a line at that level, like we've been buying it up, buying it up, buying it up, and then even here, buying it up, buying it up, buying it up. It's like they've just been like robots. Buy it up to that level every time that it sells off. And it's like they're like, all right, buying it up to that level every time it sells off. Just like a white dash line. What it reminds me of. And that was the original 61 that didn't work. And everything has been bought back up to it ever since. And anybody that's tried to trade it ever since, it's been doing this, they've just been forced to continue having to work. And it reminds me very much of a Wyckoff where, the Wyckoff in a traditional Wyckoff, we get three consecutive lows, um, like this. Like look at what we have right now. Let me pull this on here. Like this consecutive third consecutive low. It's like we have a downtrend. and effectively we have another major low, but then this one is the spring that may or may not have happened, and it's so appropriate for it to be there because this trend right here is the same trend that we have right there. The same trend that I could see doubling on the break to get us into this play out. Basically, the value of being exposed to the entire trend breaking is to have that reversal. Which is tough because I'm like, you look at the daily and I'm like, is the play right now to be fighting for a long at this low? I mean, like, yeah, maybe on a side account, but on main account, you should already be long and you should be hedged, waiting for that hedge to get knocked out and trading on a side account every single day until that hedge is knocked out. That's what I say to do. That's the part of the plan. That is the exact thing. No better way to do it than that way. That's exactly the plan and part of everything that I've said to do from the get-go. And if you're doing the side account thing where every single day you jump in and try and it's like if you like fighting 11 low zones, then that's the way. But I don't think anybody likes fighting 11 low zones, so let's not make it difficult and not hold the best trade. And now that we're above all-time high, well, the old all-time high or anywhere close to it, it's just gross being long from there. It's like it's what it reminds me of. It's gross, so I don't endorse it one bit, like I said when we got there. So it's going to be harder for people that haven't been following the rules. It's not my fault though. But at the end of the day, what's the other side of that? Well, we can be patient for the next beginning. For the next beginning, and there will be another beginning, and sometimes it involves fighting the 11 low zone to catch that beginning, just like it did on the yearly lows, the daily lows. And having fought for that means that you don't have to catch the pullbacks when it comes down because you're already in. And now we get to all-time highs and you fight for a level and then it makes it so you don't have to fight again and then comes back and takes it all from you and it was all worthless anyways. And I'm like, why? Well, because you're positioning yourself from the daily highs all the way up here from the day that I said that I don't endorse it. And I'm like, yeah, sure, side account, it's fine. But to make it, the way of life, oof, it's tough. And I'm just like, not good. Mhm. Yeah. I think it was just an excuse for the bigger money to put some readjust some positions and essentially that's that's all that it was. Oh, they're just basically reiterating what happened in the in those minutes. Yeah, at the meeting. Yeah. Which is funny because that's what they do in other very old school places, say the least. Like very very like um very 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 strict honorable places get that like in courthouses and stuff like that. I mean, they might call it something else though. Referring to it as minutes is intriguing. Goes way back, I bet. breaking out, it's working out. B points are hidden. Red yellow line's breaking. Watch it retest. And that's a hell of a way to really deal with this blue line. But ultimately, this is the direction that I think that the major players are going to be exposed. They're getting up to this blue and white line. I think that's exactly what they're interested in. So first it started with claiming the blue line, stepping on top of it, breaking the red yellow, getting to the green dash line, stepping on top of this green bar. Not for 1 second did any of the moves below that triangle, or did anything that I have to say contradict being in for the break of that red yellow line is the best way to be in, is the best way to trade, is the best way to be in for. There's no better move to be in for than to be in on this move. And to understand that it is difficult. It comes down to all day making it this point to be interested in capturing that exposure on the short term initially to the blue line that it ultimately was going to get back to for not the same reason your ordinary blue line was, because it's not that it wasn't tested. It was tested. It was tested yesterday. It was done like millions of years ago, like this was well a thing of the past. But look at how it was treated. Yeah, everything's been going down and it's been testing it and everything's been spiking through it. But it is those spikes that lead to any trend break that's half decent. No trend break that we've ever had has come from anything but a good spike out of the bottom of that level, big or small. Is it not true that just because this is big, it doesn't mean it's not a spike? Did it not get bought back up quicker than it was sold off, like literally? And it started slow and ended up going fast. Contrary to popular belief, it can't do that, can it? So it's like, of course it can, you know. So we broke through the green dash line. Of course, exposure. This is the best way to be exposed long, because anybody that thought that the sell-off was, part of the reality, it was just bought back up by the big players, the people that move the market like this. They have all day to wait because they have the patience. Like I could see myself saying they are the market, like literally, like they are most of the money in the market. They matter the most to understand what they do, what their intentions are. The way I believe. Now this could be like a fourth wave as well. Getting back to the B points could be on the table, but it's not something that has to happen. It's very dangerous to assume that it has to happen because things have clearly changed right now. Yeah, we can assume that this whole day had certain things, certain aspects associated with it. Could they all be different now that we're not underneath this green bar? Because is it not true that everything that we've done has been beneath that green bar, and that the only things that we could really say are similar are things that have happened above the green bar because we are above the green bar, and things that have happened below the green bar are undeniably different in a different environment, in an environment that couldn't get through the green bar, because everything that we did below there was trying to get through that stupid green bar. And now that we're above it, after much difficulty, and like I mean, difficulty, take your pick, like how much time it took, how many attempts it took, the fact that it came back to new lows, all difficulties for anybody that wants to be in for the break of that. It's like, what else could they have done? Did they go through all of the different difficulties to make sure that it was the most difficult thing that you could be exposed to only because you wanted to be exposed to it, because you knew it was the right thing to be? Is to be exposed to the break of the red yellow line that didn't even exist, that was made by the people on the report? Which is interesting because I clicked here and here. Isn't that interesting? That never touched the price. So it was made a trend line and then they broke it and didn't even retest it, which I find interesting. Instead, they retest the green dash line. Did you know that that's what happened? Like, we broke through the green dash line and tested it instead. Like, it was something. Now, it's never touched the price. Why would it test that like it was something? Now, you want to know what's funny? Is this was the 61% retracement. We stepped on top of that 61% retracement the same time that we tested that green dashed line. Interestingly enough, the red zone may have a relationship with the green zone. I didn't intend for this to have any kind of significant impact, but it is true that it does mark the current high and the angle that it chose to make, which is kind of strange to me. Um, if it made that pullback, it would be in the green zone. And is it allowed to make that pullback? Oh, yes, of course it is. Because look at how much of a pullback it made before. It was more. It was like it did that and our average spike. Oh wow, no, ATR is different now. Our average spike is different, bigger. It's like it's this one. Wow, yeah, it is doing that. Could it be interested in making the range apparent, like again, like it used to, like when it was here before it did that? Could it do that again? Hmm. I'm under the impression that the institutions think that they are in control and winning undeniably by this point. And it is the case that this upwards movement is very likely to have benefited them greatly. Let's put that out there. So it is that move as of now. Give or take a little bit. I honestly want to just. Oh, it is on the front. I'll just turn it down a bit. I don't want it to be in the way. But we can still see it. That's the main thing. Oh, that's interesting. The distance that they made there is very similar to the distance that they had up top and kind of on the bottom there. It's like what I would usually see but in reverse. Beautiful movement on that. Like it's really respecting the confines of the average size pullback. Now, what's funny to me is that it said screw it to this size move. It's not this size move, the size move that everybody would think it would be, but this move instead, which is kind of different. It's like for those that were paying attention at the beginning of the day, we can see that this move still does matter. The green dash line, it's so weird that it gets that much respect. Like, you know how we show that it really does get a lot of respect as we do things like that, right? Like we literally just came down and then tested from underside as well. But on the green, sorry, not on the blue. So it came down to test the green and then popped off of it and then tested the green from the underside. all fitting within the confines of this barrier. New trend forms. Everything outside the confines of that barrier is subject to being wicks and spikes. The average size spike could form. I mean, like, that would be this right here. A retest of the red yellow line and a B point. Like I said, something that should be allowed to test, not something that you should really go for, but if you did go for it, then I mean, this is the target and it can be removed. And it's like we've done this now. Like, it's perfect. Now this line starts to really get some attention. Especially when we've done like our controversial, reversal spike. I mean, like it could be part of this entire movement sequence again, which would be brutal, but I mean, it does work though. It does work, yeah. Yeah, putting this in here, not a bad idea. Oh. Oh, you know what? I want to come back to that. We're gonna leave that on there. We'll drag it over in a bit and see what it's done. It's true that, within this circle, is it not a spike? Did everything not come back as quickly as it was sold off, as instantly as it formed? It was bought back up, right? Well, that's the definition of a spike. And now we get to see, does it have any kind of interest in using the green line? Now, I am gonna just like move this over a bit because I don't think it's irrelevant. I don't want to lose it. And it's not something that's supposed to be so like nitpicky perfect, right? It's literally the average of a pullback, and it encompasses the angle as well as the distance, and I don't mind that. If it wants to give me wicks and spikes out of both sides, I'm cool with it. Because it just shows us that at those extremes, when it wicks and spikes out of the highs and lows, it just respects them all the more. Like, everything is being bought back up to those levels, and you can see how much it respects them when it uses them like that. And sure, instead of having your range end here, and here, like, why not make it end here and here? Sometimes you can have a green zone and red zone, and maybe it's a little bit farther than you thought it was. And that's okay. Maybe it's wicks and spikes that you need to encompass inside of the green zone and red zone. Um, Especially in an environment where it makes you think that everything's okay here, and then it moves into an environment where it makes you think everything's okay here, and then does the same thing here, creating that three consolidations of equal size. But and it does that, and it's true that it's expanding, but this is sideways, up then down, you know, in a different perspective, which is bullish. It's bullish because it creates a downtrend, and downtrends end by going up. And throughout the entire process of this pattern, the biggest move is a downwards one. And it is the downwards move that is the biggest move, that is the target to break that sequence and get higher. Now, when we're high, sometimes things like this can happen. So we have this one, breaks out crisp and clear. It doubled the range before it started the next consolidation. That's a fact, right? Now, what happened with the next consolidation? Standing on top of this move right here, it comes in to another consolidation. Is this right here, this idea, so far different than what we had going on here? Well, this one, it had a downtrend and came into this, and it was easier for it to double up. That's so weird. How it ended up working. And you know what's really weird is after it showed us that this was the way, because that's what happened in here, in this whole environment, that, okay? And then it did this, where it did not go down at all, which is kind of interesting. I'm like, where's this? We haven't seen this yet. I'm like, what is this move that we're in here right now? It can't be this. Could it be? Just thinking. So it is true. So we broke the yellow line after retesting it. We continued above and beyond the green zone and the green dash line. Yet again, we're interested in testing from above. So in the event that we get back to any of these B points in here, which I can mark, uh, it'll effectively take your position from you. So it's not very good to do that. So we want to make sure that it's safe. And like this distance, I guess this distance doubled. Already come from this. Holy smokes, hold on a second, hold on a second. This is what we were looking at. Curious. I'm curious if you know how we had this spike on the bottom first, then this consolidation, and then this spike on the bottom. Hold on. Yeah, no. Basically, a spike could happen first on the this, and then have a spike on the bottom. That would be the inverse of this. And I think that's kind of like what we're doing right now, maybe. See. Because this part doesn't really look like we're doing that. I mean, it's usually choppier, which I'm not complaining, but take off some of the symmetrical triangle lines. Now it is true that we have 5 waves. One, two, three, 5. like so. You could say it's truncated, but I'm like, how do M's ever turn into W's if we don't stop here sometimes? Or does it always have to be like this? No, it can be like this. And honestly, it doesn't have to become an M like I just depicted it could. But at the end of the day, it could fail to become a good M and instead find some interest in some of the short term barriers. Like there's a lot of congestion in this area. We've got a POC right here. We've got a VWAP, which is a white line right here. We've got the underside of this symmetrical triangle, which is an incredible, it isn't an incredible level, but it's still a level nonetheless. The green dash line, which is less important than ever, but it is still getting used with absolute, precision, which kind of makes me want to turn it up a tad again because I'm like, wow, where'd that come from? Nice retest again from the other side. Still important, I guess. Um, then we have the old 61, the 61% retracement right here. That is a level that has never seen anything more than wicks and spikes past it. Can we make a step beyond the 61 and actually turn something else into support above it? You know, that becomes the question. Because I could tell you one thing. You could say, where'd that come from? So strange. We've never seen that before. Not with this 61 at least. I think this fit 5 wave move, although it forms well, eggs people on to be short, and it's gonna fail. Like I said, the M doesn't have to form. And I mentioned that as we were at the most profitable point for anybody that thought that the M was going to form. And effectively, only trouble so far. Instead, it's a response to a level, one level that, is okay. You know what's really weird about this level? Is it's actually not a trend as well. It is a level that I duplicated. Notice that I clicked it here. I mean, I would never click it there. I moved this a click from here and a click from here matches a click from here and a click from here. I moved this trend over. That's why it's the same angle. And we're using it like it's a freaking trend. It's not. Like you can't expect most people to have done that. Like they're not responsible for this high, but somebody that's done that with that line is. Like that line gives an interesting perspective. And it's in conjunction with the green dash line, another one that I would suspect many people not to have. It's this line, doubled. Equality around both sides is something we've seen very frequently. Now, just like we had a different, oh my goodness, where is my explanation of what it was going to do? You remember this point right here, where it made the spike and came down, made the other spike? That range, that kind of movement, we get it, but in reverse. Spike happens out of the top first, and it did. Except it is the key that, we've got this movement potentially happening on the other side of this movement, is the gist of it. Just like we had this movement and this movement. So it's different than what we had here. But this, curious about that nonetheless. It presents another trend very similar to the one from before. Ironically, I do believe it will have a very similar result, contrary to a lot of people would be timid with it because how many things have happened 2 times in a row? Can they expect it to work the same way? Yeah, this one, I think so. The other ones, this one, I think it respects being in this channel that we were in at the beginning of the day, but using this VWAP is coming to an end because everything the VWAP was good for has ultimately kind of just been thrown out the window. Like, wasn't it being used for something and then that something kind of changed at this point? And now it's like, what's up with this being on top of the VWAP when everything is supposed to be below the VWAP? We've never done this before. So I look at this as there's a certain entity that has seized control for the end of the day, like on a dime. Because it's like if they don't, somebody else will. And it's either going to move the way it should or, it'll. Like I'm like always thinking, I'm like, what do you think that they think? Well, they're always moving it the way that they expect it should move, and fulfilling technical expectations regularly. Um, I think that they're quite good at it, to be honest. And the other side is the random nature of the public. If they got away with their beliefs that the news drives them into, it's I don't think it would be so back and forth. I think it would be more one directional if the people actually mattered as much. And there wouldn't be so many moves that overlap progress. Because think about it. If you had control of the market to do what you wanted it to do, why would you ever choose for it to overlap your progress? Quite interesting. If everybody could just agree on benefiting in one direction, you know, why wouldn't we all do that? And I mean, when the market first started, you could see it was a little bit more like that. It was a little bit more, friendly, people associated with it. Slower, and the things that happened more regularly. There was no traps or anything like that. And no, now there is. So it's like, well, we can learn about them and identify them easily, or we can, have them spring on us basically. But this is a trend that I think we're going to get involved with pretty soon here, the yellow one. Ultimately, the time that we have from now until then is not very much. It's towards the end of the relationship with the green dash line. And it's like I've seen there is a new green dash line I think that it's more interested in. There's one down here as well, but that's just basically don't drag any stops above it. Targeting it's a little bit tougher. Don't you find it interesting that they managed to not only test the red yellow line, which was, created with no test before, and then they came all the way to test it like that. And I'm like, wow, really? On that like that? On a line that's never touched the price before. It's extraordinary. Mm-hmm. Oh, you mean this one here? There you go. Yeah, it's interesting. I was so interested in the downtrend line. I couldn't even consider that one. Not until after the downtrend breaks. Because when the downtrend breaks, then we'll have a real concrete trend and all eyes will be on the support. That's just newly formed essentially. But that line breaking puts the puts a tough situation on W to M, because if it goes W, W, that's going to be interesting. And if it wasn't capable of failing a W into an M, how could it ever rise on W's? And it can rise on W's having never made M's. Where the closest thing that it does to an M is this pattern, which is so interesting to me because that is literally a spike out of the bottom and a spike out of the top of an area that it was consolidating. And it does that multiple times throughout the sequence. And every single time it has this little consolidation, it divides the two triangles. At least in that, and it has done that before. Obviously, there can be some little changes throughout the sequence, but it tries its best to keep up with that general code. Now, it has been very good at testing all the B points today. I just suspect that the range will end without tested B points, so beware of assuming that the middle B points of the consolidation are likely to get hit, because I could assume as well that we are closer to the end of the consolidation than the beginning. And if this consolidation ends, we don't have to test the B points inside the middle of it. Not until we double the consolidation, perhaps. We could go for some different ones up here even. I think that we're going to get involved with the test of the red yellow line from the high too. Because like this is a really interesting range. The whole high started in this consolidation up here with this smaller range like that. And then we bounced on it and bounced on it and then effectively came up to test it from the underside just like that. And I think that that's what we're going to be interested in doing again, getting involved with that range and getting into it and getting through it. And I think that it'll mark a very important time for change. Being exposed to that red yellow line at the top is pretty important, as difficult as it may be. Now I remember that I drew the purple area here because it encompassed the majority of the volume since that point at the time. .61% retracement becomes a major consideration now that we're close to it. The B point from the low can be adjusted to the high. This becomes a new red-yellow line, the line that we cannot miss because it provides the most value for those that are exposed to its break. And I'm like, okay, this here is very much like the 61% retracement that we had before. And I'll just mark that in there, taking these lines off. Doesn't have to hit, but if it does, better to know about it than not. And it is the edge of the purple zone. But remember, nothing like being exposed to the red-yellow lines breaking. The lower and farther away you are, the easier it is to withstand retracements against your position. So consider keeping a core and hedging against it. Makes it easier. Effectively, anybody that was exposed to the blast from this previous consolidation was what? How did it treat them? So strange, eh? They're like everybody that was part of that excitement just got wiped out. And anybody that was part of the tough, hard, prolonged consolidation area that was boring or hard, they were the ones that could benefit on the prolonged period of time. So we tested a small B point here. It doesn't mean that it's not good to go anymore. It's still a B point that I very much think will hit in the future again. After all, it's like, what fib did it come up off of? We didn't really get involved with anything crazy there. 141 again. And the last time, the last time that we made it from the 141 to the 100, it came back to the 141 and hesitated. Yeah, regardless of this response at this purple zone or 61% retracement slightly below, the 61 and the 161 are lining up. But regardless of their response, the red-yellow line remains the most attractive line to break in the series of lines on this chart. And why is that? Well, because this line right here, this particular red-yellow line right here, that one, it's responsible for breaking to get all of these levels and potentially this one. And why this level is important is because it marks the distance that we could begin making these spikes out of the other side. Not as quickly. I'll tell you that right now. I'd be surprised if it was as quickly. But we'll be interested in making spikes out of the top. Now, it doesn't have to be the big ones first either. Do little ones first. But ultimately, the bigger ones are, the most attractive ones and the most dangerous ones. Because when we make those distances out of the other side, regardless of what fib we're at, it might find that this place should be the middle. And if it does, well, that could last for a while. And then it might change characteristics when it leaves this entire environment. Be curious to see if this place became the middle. Now I can't help but remember the distance that we made beneath every other 180, or sorry, 61 was this distance. And that distance, I mean, it seems like a bit of a stretch, to be honest. But if we did make that distance, it would be the 188 in this case, which is intriguing. I think it would be difficult to make that distance, though, as I said. And it's suggestive that everything beyond the gold dash line there, that 61, could be a wick and spike back to it. Returning back to the 61 from the underside is normal. And the acknowledgement of this red zone, intriguing. I don't think it's important, but yeah. It's essentially where the biggest move started from. This is that 188, 200. It puts a lot of stress on the red yellow line. On the edge of the node. Now that little range, in a situation like this, you'd rather it not be there than be there. Something to run into. Isn't it strange how everything was a spike right past the 61 and it came right back to the gold line, just like I said it would. It's very, very strange. It was a spike, though. Particularly a spike, just like all the other spikes that we saw beneath the 61. Oh, that's something that it hasn't done for a long time. Yeah, the last time it did that, it led to the trend break being significant. And we can see if that is the case with this one. In the event that the blue line gets on top of the orange, steps on top of it like it did before, we could get some pretty similar results. But I do think that these dips will be blown out of the water by what we will see the what we will see the market is capable of doing to the upside. No, there we go. Yeah, what we will see the market is capable of doing to the upside is far greater than whatever we have seen come down over the past few days. We'll see that as the case. This red yellow line is still the most important trend of them all in this environment on this chart. It marks the ability for it to change um, the most current, like I would say, the most impactful variable, like the number one thing of the moment can change. The fact that we're in a downtrend, is put to the test on the break of that red yellow line. And like I said about the original support line, like remember when we were talking about the angle and the need for readjustment? Well, now it is readjusted significantly from a 36-degree angle now to a 13-degree angle. Enough of a readjustment, it would seem. Yeah, price will have to go up before that changes. I find it unlikely that that will change before the price. Funny that the momentum is like an inverse head and shoulders, but the price doesn't look anything like it. The price looks like one of those dodgy phase A's that's actually been working out really well, where the preliminary support is actually a little bit higher than the rest of the pattern. Like usually it's supposed to look like this. And I mean and that's fine, but when it does this weird one where it kind of gets cut off here instead, um if trend break for trend break, it's still the same thing. It's just the proportions are a little off. And I can't help but notice what we do have here as well. Since we've managed to go sideways here, yeah, I question whether or not these two pullbacks could be viewed as something like a five-wave move. It's a little bit much because it's more like this, what it's decided to do here. Yeah. basically, I'm just saying another trend break, some sort of fake break or trouble before rallying through the highs is normal. Essentially, it's typical for them to try and make this a process of struggle. And I mean, like, they just want you out for the thing that's the most valuable. There's the trend break. Oh yeah, I think it's getting ready to pop on top of it pretty soon, but it did fake out like I mentioned in the chat there as well. It's working out. Yeah, you can see it should be stepping on top of that RSI now. Yeah, see? Mm-hmm. Yeah. 3 drives too. Yeah, yeah, there is. But yeah, well, the thing with the 3 drives is always it's the third drive. Like this is a 3 drives because that is the third drive that's been untested. But this one also was a 3 drives and it played out back to the first of the three and it was fine. And I mean it's still the case that some of these are untested up top, but I think we'll get them. That's an area I think we're gonna get involved with. is what I had to say about it. Before it even started making the wicks and spikes, another trend break, some sort of fake break or trouble before rallying through the highs is normal. That's what we're getting. I like the idea of closing the gap above. Yeah, I think it's getting ready to step on top of the barriers it's presenting right now. Close the gap above, ultimately. Sometimes it has little jabs before it begins. This basically identifies the downtrend a little bit more. Go ahead and put this line across these highs. Just past the 61 there. Got to be past the 188 well for this fib. Oh, just at it now. This B point up here, it's an old green zone. We got 5 minutes till imbalance. This is basically how it's set up. Oh, for the end of the day. Last thing to happen is the red yellow line is to break. We've got the imbalance coming up that could increase volatility. We're at the 188 right now. Almost like it tried to squeeze out a fifth wave right before the imbalance. That's the imbalance right there. All of the imbalance is subject to being a spike. Larger set, yeah. Put it at a 260. This B point up here, never tested. Only from the 140 leads me to believe that 141 is likely to be on the table. The imbalance spike hitting some ring. Another trend is formed. Yeah. Well, I noticed it was a 261 from. Yeah, that particular reversal or that particular trend break, it has to do with this right here. That's specific level 140. That interesting. Yeah, I think it's gonna treat the trend break pretty decently, and They get us through the node. I think. Yeah. Yeah, yeah. Yeah, I know it's gonna read that for a long time though. I think it's gonna go sideways on the daily. It's gonna look like it started to come off. It's gonna look like this for a while. And it ultimately isn't gonna be far down. I think a lot of stocks and options traders that shorted halfway through the dump, we're gonna come back and see them tomorrow. I think we're close to a pretty big rally, and it's gonna throw everything off. The bearish momentum's still gonna look bearish when we meet the new all-time high. They're gonna Oh, it'll get hit. It's just we're beginning the 11 high chop base. So this is the first spike, and it's very unlikely for it to come all the way down on the first. I think it's seventh spike on the high. Yeah, could be the case. Yeah, it might be the case. I think that these lows, they're in trouble. People that are holding from long from before, absolutely safe. I think. Yep. These these lows, they could be wiped out in the nighttime, and we could start already up something like 60 points, 70 points already tomorrow. People will hesitate to buy into something that's already high. They'll try and short it, it won't come down. I suspect this way. Take a look here. Like a pitchfork. Nice. Okay. Yeah, that's the closing bell there. But basically, I can see that we've left it so that the red yellow line are going to be that's going to be broken overnight from what I can see, and we're going to have to effectively monitor that. I think it could be quite choppy, and some progress in the early morning is typical. I think that we'll be getting plenty of volatility again at the open, so that's going to be something to look forward to. It could be the case that the overnight session contains a trade that could provide exposure through the entirety of tomorrow. So I'll be looking for that. But hopefully, you guys had a wonderful day, and I'll catch you guys later. Yeah, anytime. Take it easy. Yeah, have a good one. See you guys. You too.